Goes through, and a bid for Commerzbank, if they pursue it, what all of that would mean for UniCredit. So we'll see some movement there. EV makers in focus after that. Reuters
I will show you how to get the best funding for your startup.
Chinese imports, and Anglo-American certainly in focus, selling their steelmaking coal business, simplifying, shrinking the business. You remember that BHP bid guide that they pushed back on?
Absolutely. We're starting to see some effect coming through from that. Right, here we go. Monday morning's opening trade. We're expecting the best end trade to be firmly on here in Europe, and the FTSE may be reflecting that least. So the FTSE's already up by 1/10%, but the IBEX in Spain is up by 0.6%. We're expecting similar numbers to be posted elsewhere around Europe, 6, 7, 0.8%. We are expecting from maybe the IBEX, the CAC, maybe the DAX as well. But we've got a lot of news coming out of the DAX a little bit later on. But the stock 600 only up by 0.2%. Let's wait and see as we fold in some of the other numbers. The CAC's up by 4%, so maybe that stock 600 number starts to climb a little bit. We'll wait and see exactly, Anna, what the DAX delivers in just a moment.
Yeah, absolutely. So we are seeing some positivity then coming through, certainly in the French market, waiting to see what we get on the DAX. As you pointed out, the Spanish market, usually quite high beta, isn't it? And that one is up by 0.8%. FTSE MIB up 0.5%. So we do see some strength coming through on that particular market as well. In terms of the individual sectors, no surprise, I suppose, when you see the French market doing so well, that consumer products and services is the best performing sector in Europe. And it's some of the luxury space there. It's also some of the home builders in that market as well. And in fact, real estate was one sector that did well at the end of last week. But this morning it's Kering, Puma, LVMH, Moncler, but also Barrett Redrow in there with consumer products and services in that sector too. So it's sort of mixed bag, but luxury certainly to the fore. Autos is another strong performing sector. Volvo cars and some of the other BMW I can see is higher Lidl this morning.
Roche and Novartis are both soft. This is the points drag on the stock 600. They're the two biggest points drags. But UniCredit is the third biggest drag on the stock 600 this morning in terms of the news that we have seen regarding takeovers being folded in. Banks generally are a little bit weaker. Can't see any other kind of clear and obvious themes coming through this morning. Banks seem to be reasonably mixed. But as you say, it is actually maybe the luxury sector and the technology sector that are driving us hard this morning. LVMH up, ASML, SAP, Schneider. Airbus and Safran are both having a reasonably good day as well.
Yeah, worth noting that UniCredit, I think, I'm not sure if you mentioned, is down by 1.2%.
Biggest drag, yeah.
Yeah. Sorry, you said. So that's worth noting, of course, given the focus that we have on M&A within the Italian banking sector. The FTSE MIB, as I say, is up by 0.5%. We'll keep an eye on the banking stocks there. In fact, hardly any stocks in Italy are in negative territory. It is a pretty risk-on day, and that probably has something to do with, well, yes, banking M&A, but also Scott Bessent. Let's talk about that. Patrick Armstrong, Group CIO at Plurimi Wealth Management, joins us now. Patrick, very good to have you with us. Happy Monday. It seems a happy Monday for markets. They seem to be welcoming the appointment of Scott Bessent, hedge fund manager, Wall Street's guy, seems to be the way that many have described him over the weekend, and a fiscal hawk. What does all of that add up to for you?
Yeah, it's not a bad news scenario, definitely, because with Trump's appointments, it could have been somebody who was very pro-tariffs, very much cutting taxes, but no offsetting fiscal discipline. Those were the worries that Wall Street had. And I think Bessent, it's too early to say he's answered those worries, but based on what we know so far, I think that does alleviate some of those concerns.
I know. I wonder what the secret sauce is going to be, the secret answer. How are you going to get the budget deficit to 3%? but also cut taxes at the same time.
Not going to happen. In my opinion, populism is the overriding theme of Trump, of all of democracies in the West right now. And I think any unfunded tax cuts just go to bigger deficits, higher debt. I think that's the actual plan. Tariffs will be used as a soundbite that will basically reduce the deficit, but it won't be effective. So in my opinion, yes, it's not going to reduce the deficit.
Do they offset tax cuts?
I don't think so at all, no. Tariffs give you a short boost in the dollar as it reduces demand for foreign currencies, but then when the retaliatory measures come in, it just reduces aggregate trade, and I don't think it's a big win by any means.
Inflationary?
Inflationary. Everything Trump does is unequivocally inflationary apart from the deregulation. So I think tax cuts boost demand, tariffs increase prices, unfunded debt create the need to print new money to pay off the old debt.
So do I buy stocks and sell bonds in that environment?
I hate treasuries. Treasuries yielding 4.3% are pricing a decade of perfection from the Fed. If you look at inflation break-evens over the next decade, 2.3% is what the market's pricing. And when you've got populism, you've got tariffs, you've got wars, you've got environmental issues, inflation is going to be much higher than the market's pricing. There's going to be intermittent spikes. And much prefer a tip. You get a real yield of 2.2% on a 30-year tip. So you're growing your purchasing power for the long-term risk-free. Buying a conventional treasury, I think you're going to lose purchasing power over the next decade.
So why do you think bond markets, well, we're seeing yields fall this morning on the Besant news? They see the world's fiscal...
Yes.
They see him as bringing some fiscal discipline, but from what you've said...
I think that would
not
be
that good reason for those yields to drop.
If he was putting his own policies in place, I think there would be fiscal discipline. I think he's going to have to not completely parrot Trump's policies. I think he'll present them in a more grown-up way. He'll push back on things, but everyone who's followed Trump knows what he wants to get through are short-term wins. Everything's going to be pro-growth. Whatever the problem is, fix it quickly, think about the long-term later, and that's populism and that's inflationary.
It's good for that. Maybe it's good for U.S. stocks. Is it in the short term or only in the short term?
Good. Yeah, it's hard to say how there's anything bad news about this for U.S. stocks. He obviously has promised Trump he's going to implement the tariffs, but I think it's going to be in a much more grown-up way, not just sound bites that scare the market, and I think that's good news for equities.
But are equities going to be comfortable with the idea that yields go higher from here?
I think when you saw yields get to 4.5%, you saw some real weakness in...
What about 5? What about 6?
That's when things start to change, yeah.
Do you get there?
Next year, I think 10-year Treasury yields are above 5%, based on a Fed funds that gets to around 4.25%, 4 maybe only, but you're going to have a normal term premium. If I'm right about inflation and the market starts to price in the risks of inflation, you have to be compensated with the term premium. So it wouldn't be outlandish to think if you've got the Fed at 4%, the 10-year yield's 5.5%. That's just pretty normal historically.
Patrick, can I ask you about banking M&A? Seems to be a surprise topic of the morning. I mean, it's been around in the background for a long time, and it's something many people have talked about as being entirely necessary cross-border. UniCredit has ambitions in that space, but today is all about the domestic Italian M&A story. Can banking M&A deliver something material, do you think?
It's really got to turn into a cross-border M&A to really solve the problem of overbanked Europe and create some synergies, and you've not seen any impetus for that. Every country wants a strong national bank that they don't really, just for national pride reasons, I don't think they want to see merging with other countries. And
is the market, maybe the market is interpreting this Italian M&A story as meaning there will be less cross-border M&A. I mean, Commerzbank shares, for example, down more than 6% today as UniCredit makes that offer for Banco BPM. Andrea Rochelle would like us to think that the business can pursue all of these things at the same time. But
I don't know if that's why it's down, or maybe they're down too, maybe thinking there will be bids for other companies too. It's an incredibly cheap sector, but U.S. banks are quite cheap as well. And if I'm right about the yield curve, the U.S. banks are going to have a very strong interest rate margin that probably Europe's not going to get to, because you're not going to have the inflation, you're not going to have the growth in Europe, which leads me to prefer U.S. banks still.
U.S. stocks?
I'm underweight U.S. equities in my global portfolio. I've got 62% of my portfolio in the U.S., though, so I've got a lot of U.S. stocks. If you look at the MSCI World ex-U.S., it's at a record high, or the U.S. is at a record high multiple versus the rest of the world right now. So 22 times forecast, 12 months earnings versus 14. Year to date.
Where's the overweight?
So I'm overweight everything else but the U.S., but very slightly. So I'm overweight Japan, I'm overweight UK, pretty neutral on Europe right now.
So what does the portfolio look like in terms of its composition? A lot of stocks.
all the big cap U.S. companies, I still like them. They're very expensive, but they deserve the multiples they trade at. What I'm worried about in the U.S. is there's ancillary companies that are part of the AI trade that are all trading up with the mega cap companies, and I think the mega cap companies are the winners. They've already got clients. They're going to improve their pricing based on AI benefits. Companies that are trying to generate customers based on AI, it's much more difficult. So I really think the incumbents, the big mega cap tech, that you've got to get them from the U.S. So I own those companies, but I'm underweight basically the second tier of tech that are trading at multiples that I think are a little bit too ambitious.
Do you see opportunities in AI in Europe, Patrick? It's always quite difficult to take NVIDIA headlines and translate them into the European stock market. Do you see that as investable in Europe?
It's not. We're playing it through the U.S. It's a good question to ask, and there's probably good answers to it. I haven't found the good answer to it right now, but it's much more easy and clear how you can play it through U.S. companies right now.
And have we run in? Are you still? Where are you on that US AI trade then? Is there still?
So I own NVIDIA, I own Google, I own Facebook, I own 4 of the big 6 basically, and I do think AI is real. I do think NVIDIA just has such a clear revenue growth model because the companies that are buying their processing units are all companies that are so cash rich that have promised their investors they're going to spend there. So I'm comfortable with the valuations there. They are a bit extended. They trade at 30-ish times earnings in aggregate, which makes sense given their growth, their profitability, their defendable market share. Regulation is a risk, obviously, and antitrust measures, but I don't think the U.S. is going to want to pull the carpet from underneath these companies as they're competing with China.
Can you see a catalyst to get U.S. stocks lower at this point?
Yeah, it's the 10-year Treasury. That's what it's going to be. It's going to be.
So where's the point? Where do I have to
So I think once you start getting above 4.5, we saw it a couple of weeks ago. There was some real weakness, not for long, for about 4 days in these stocks as 10-year yields hit 4.5. And as yields move higher, 2022 was terrible for big cap tech companies. And as yields move higher, there will come a point where 30 times multiples just aren't sustainable if you've got 5% treasuries. So unexpected inflation is what kills treasuries and big cap tech at the same time.
Wow, that sounds like it's pretty devastating for a 60-40 portfolio. Patrick, nice to see you. Thanks for stopping by to see us. Patrick Armstrong, Group CIO at Plurimi Wealth Management. Course looks like this here in Europe this morning. These are the main stocks that are moving. As you can see, everything looks higher. Luxury in particular, though, looks higher. You've got LVMH up by 2+%. But elsewhere, you are seeing a little bit of weakness. Maybe there's mixed story in the banking sector. Certainly that is a story that we're covering very carefully this morning. We've got news on Barclays too.
Do we want a story this morning that takes us back to the GFC? I have one for you if you want it. This is the UK FCA fining Barclays £40 million for failure in disclosure. And this goes back to the GFC, how each bank navigated that and survived that. Well, in the case of Barclays, they took an investment from the Qataris and they were found to have failed to disclose some details of that Qatari arrangement. So that's what they're being fined for. Though Barclays saying there's no material financial impact and they already took a provision for this.
I was about to say, there must have been provision for this. Yes. They've had time to think about it.
They really have. And they took a provision in 2022 and it has no notable effect on the stock. I mean, the stock is still in positive territory, but that's just a line in the sand, perhaps, on that particular story post GFC. Let's get some of the other stock movers that are very much in the mix, sticking with the banking sector, but over in Italy, Joe.
So there's a lot of action in these banking stocks this morning, Anna, particularly in Italy, as you say. Now, Banco BPM, we've just got an opening price on that one, coming up around 5% at the moment. Now, remember, the UniCredit implied takeover bid, it's actually only around €6.5 a share, so we are seeing it coming up significantly higher than that on the early prices, given that takeover deal potentially coming through. UniCredit falling. Guy and Anna have been discussing the comments from Orchel, speaking in a conference call, saying this should not be a surprise. But we are seeing their own share price coming down a bit. And the one really hit is Commerzbank, because remember that UniCredit was potentially looking at a bid for Commerzbank. That's what's been speculated, at least. And that one is falling 5% at the moment. Monte Paschi I had as well, because BPM itself was actually a potential touted bidder for Paschi. So many moving parts to keep on top of, but we are seeing some decent moves in those, particularly BPM and Commerzbank, really the big ones impacted by that really interesting news of a potential progression on Italian banking M&A. Then, speaking of M&A, we've got ITV. This report coming from Sky that CVC and an unnamed broadcaster are looking at the UK company, seeing the stock coming up around 8% at the moment. ITV has kind of been a perennial touted takeover target. Potentially, will we actually see this finally materialise for the company? We'll have to wait and see on that one. Then Anglo offloading their steel-making coal business. This is to Peabody Energy over in America. It's about $3.8 billion. But as was discussed as well earlier on the show, this was something that was speculated when BHP looked to try and buy Anglo. Anglo rebuffed it, but everyone said they might potentially look to sell that business anyway. So we're seeing it up only around 2.4% at the moment, but nonetheless, a bit of movement on that one. Then we've got the EV makers following this report. Now, this is actually coming from NTV. I believe this is a German publication, but also picked up by others, including Reuters and us as well. And we're seeing, again, in the German EV makers, the German automakers with EV exposure, potentially minimum pricing on Chinese EVs in Europe. That could potentially be positive for these companies, and they are gaining today. And then in terms of a UK earnings, another negative one from the B&Q DIY maker. We all love to go down to B&Q and buy our DIY supplies, but that one slammed down 10%. They're warning once again of weakness in the UK. Now, France is also pretty soft, but that's a smaller market. The UK growth only around half of what analysts expected in the last quarter, and on a yearly basis it is actually still in negative territory for the B&Q and Screwfix owners. That one down 11% today. And then finally, in ratings changes, mentioned Santander. Now, Morgan Stanley likes banks that have minimal rates exposure but higher exposure to fees and also strong capital. Santander is one of their top picks. Pretty interesting, given we've seen news of a potential windfall tax in Spain. They still like the stock, and Santander rising today 1.4% in Madrid this morning.
Joe, thank you very much. Joe Easton from our equities team with all of the equities individual stock news you need. UniCredit, a couple of other lines coming through from Orchel then, Guy, just this morning, saying as of today, Commerzbank is a financial investment. So we've heard that line before, limiting expectations perhaps there. And he's talked about not going after the rest of it until after the German election. UniCredit has no ambition on Monte Paschi, which is interesting because some people have joined the dots and said, well, maybe the reason he's going after BPM is because BPM's been going after Monte Paschi. But here he says no.
Yeah, there was this whole idea that maybe this could just be a giant Italian roll-up. You could do a whole series of transactions in one and achieve multiple aims with that. Maybe he's pouring a little bit of cold water on that, maybe aware of the regulatory risk of trying to do so much and how much consolidation will be tolerated by Italian politicians. Anyway, coming up, we're going to take you to another sector here in Europe. There are reports that Brussels and Beijing are nearing a solution over EU tariffs on Chinese EV imports. We'll talk about that next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to the opening trade. We are nearly 20 minutes into what's been an eventful session. Big picture, we're factoring in some risk-on moves across European stocks, as we did in Asia, because of the appointment of Scott Bessent in Treasury over in the United States. But underneath that sort of macro narrative, we have some sector-specific stories that we really need to revisit. So we'll do that now. And first, we'll go to the banking sector. UniCredit and BPM, the share prices of both of those very much on the move. BPM moving higher, UniCredit moving down, after UniCredit has launched a €10 billion all-share offer for the domestic rival Banco BPM, opening a second major takeover front, as CEO Andrea Orcel also pursues Commerzbank. Let's bring in Bloomberg's Southern Europe managing editor, Tommaso Erpart, who's all over this story for us. Tommaso, take us through some things, some details perhaps, around Banco BPM and what it is that UniCredit is trying to do here, because it's interesting that there didn't seem to be a premium on this deal, and yet the BPM share price goes higher. So what are we missing on that story?
So good morning. This was the 6 a.m. Monday move by Andrea Orcel. Somehow he moved back from Germany to Milan, bidding for Italy's third largest bank. Why it's so interesting? Because just a few days ago, Banco BPM had bought a stake in Banca Monte dei Paschi di Siena, and we know for a fact that the Italian government wanted to create a third banking group around Monte dei Paschi di Siena. For now, we don't have any response from the Italian government if they will approve, if they will not approve the move. And also, Banco BPM has an important investor among its shareholders. Crédit Agricole, the French bank, has about 9% of Banco BPM. So the reason why Banco BPM is going up is probably, we can guess, that the investor may think that this is just the beginning and not the end of a battle for the bank. I'm just guessing.
Yeah. Tommaso, when Giorgia Meloni woke up this morning to this news, how do you think she would have reacted? Is this something the Italian government will be in favour of? You say we don't know at this point, but do we have an idea of the kind of landscape that Rome is looking for in Italian banking?
So, on one side, that Banco BPM was a potential target for UniCredit has been in the card for months. It's a very rich bank based in Lombardy. And UniCredit could expand in Italy with Banco BPM. And that's for sure a good fit for Orcel, and speculation about the possible bid of Banco BPM have been going on for months, not for years. So not a total surprise. The surprise probably is in timing, just because very few days ago, Banco BPM bought a stake in Paschi, and a few days before, Banco BPM launched a takeover bid on asset manager Anima. So obviously, this is like the third move, and a very bold move by Andrea Orcel on Banco BPM. We'll see if Italy sees this as a good deal for the country, creating a big Italian champion to rival Intesa San Paolo, or if the Italian government would favor a third banking group. But this is left somehow to the market, and Andrea Orcel made moves. So now it's up probably to Banco BPM investor to see if this is a good deal for them or not.
Okay, we'll get that verdict perhaps. We'll watch for further developments behind this share price move this morning. What links do we draw between this and appreciating your focus is Southern Europe, Tommaso, but what links with Commerzbank? Because the market seems to be suggesting that Orcel can't go after all of these things at the same time, because Commerzbank is down by 5.5% this morning.
Yeah. So first of all, Andrea, Orcel is going for big deals. So I don't think that a Banco BPM move means really anything substantial on Commerzbank. But this is what investors are reading in the morning. If Commerzbank fell almost 6% at the opening, so it looks like at least from a market movement point of view that somehow Orcel is focusing on Italy after being focused on Germany for some months. But we'll see. He said on a call very few minutes ago that for now, Commerzbank is a financial investment. So you can read it as a little bit of cold water on potential takeover of Commerzbank. We don't know. We'll find out. Our reporter, Sonia Cisleti, is on the field. So for sure, you will read it first on Bloomberg News.
We certainly will. Tommaso, looking forward to that. Thank you very much indeed. Tommaso Eparts joining us, Southern European Managing Editor, covering the banking story for us this morning. Shares in European EV makers trading a little higher this morning. This on reports that the EU and China are nearing an agreement on import tariffs. That's according to a report from the German broadcaster NTV. For more details, we're joined now by Craig Trudell, Bloomberg's Global Autos Editor. So the idea here is that we get a minimum price in Europe for Chinese EV imports, which sounds great for the Chinese. I'm trying to work out why it's good news for Europe.
Yeah, I do kind of wonder just how much stock we should put into this for that very reason. You have this information coming from a German politician. We know that Germany has come out forcefully against these tariffs, was not in favor with going forward with them, and wants them to go away. And so a question of the source of this information from the sort of from the jump. But also, I think if you actually look at the comments that were made, the level of detail is quite vague. So we've known for weeks now that there have been these discussions about price undertakings and trying to set a floor. There's real question as to whether that would be more effective and more sort of helpful to the European industry, as opposed to putting in place tariffs that would lead these companies to set up local manufacturing, which I think is what other parts of Europe would prefer. Germany, of course, what they're concerned about is making these tariffs go away so that there aren't retaliatory tariffs put in place that would hurt their manufacturing.
And Craig, just briefly, I mean, this would be a hard sell to the electorate, would it? That, look what we've done. We've done a deal that means you will pay more for your cars than you might otherwise have.
I think in both cases, whether it's tariffs or these price minimums, you're making it more expensive for people to make this transition, which is the very issue that we've been talking about, sort of ad nauseum for months and years now, that electric vehicles are still much more expensive than combustion cars. And when you put these measures in place, it actually makes this transition more difficult.
Craig, thank you very much. Thanks for joining us. Bloomberg's Craig Trudell. We spent a lot of last week, of course, talking about Ukraine and escalation in Ukraine. We will discuss what Donald Trump's new administration means for Russia's war in Ukraine. That market focus, no doubt, will return. So we'll get to that conversation. That's next. This is Bloomberg.
In case you missed it, on Bloomberg Technology, We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like this redefine a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back, everybody. This is the opening trade. It's Monday morning. We have green on the screen, though, as delivered by the new Treasury Secretary, perhaps. We see a little bit of risk on in Europe. Some of it's faded, though, even in just the first half hour. So the CAC 40 started out of the gates up by more than 1%. Now it is just up by 0.5%. So we do see positivity, Guy, but not quite as much as we had. We've been dealing with a lot of interesting sector-specific stories. We have plenty of geopolitics that lingers in the background as well.
Geopolitics, got banking, got all kinds of things going on this morning. Anna's bringing up the fact that maybe last week I thought the year was over and we could basically all rest easy, but it does seem a few things we need to work our way through. One of which is, of course, what's happening with the Trump cabinet. We now have the final piece in the puzzle. Donald Trump has filled his cabinet with people he wants to carry out his America First policies. The economy, the border, national security, etc., etc. In a nod to Wall Street, hedge fund manager Scott Bessent has been nominated to the U.S. Treasury Secretary. Chris here with more details.
Guy, Anna, let's talk about what he's actually advocating for here. We heard about this plenty on the campaign trail with President-elect Donald Trump saying we need to address the budget, we need to decrease taxes, and we need to increase tariffs. How do you do it without shaking the financial balance sheet of the U.S. government? Well, that's Scott Bessent's job, and he's advocating it through a 3-3-3 policy, taking a page out of the Shinzo Abe playbook of all places. Remember, for Japan, that worked, but Japan's a very different economy than, of course, the United States. But here's what that means. It means cutting the budget deficit to by about 3% to 2028. I'm going to show you what that looks like in just a moment, but stick with me here. He's also talking about deregulation. It's not just about tax cuts. It's also about getting more tax revenue by having more growth, and some of that is spurred by taxes. Other is by other incentives. What those other incentives are, we don't actually know, but it's something that he's talked about, not to mention the energy sector. And we're talking about oil, we're talking about natural gas, we're even talking about electricity to power some of the AI story. That's what producing an additional 3 million barrels of oil per day comes in handy. But it comes all right back to the deficit, because none of this is possible if you can't balance the books. And that's where I want to go next. The idea here that by 2026, you are still looking at a -6% on the U.S. deficit, something that isn't really changing going going back to even right now in 2024, it is getting worse and worse in the last couple of years. More spending by the U.S. government, really relying on being the U.S. kind of reserve currency, the bond market that has extreme liquidity relative to the rest of the world. Here's where it shows up, though. It shows up in those tariff-exposed currencies. If you are balancing the books, if you have less taxes, where do you make up the difference? It's tariffs. It's Europe, it's China, it's Mexico, and it's Canada. And here's where the geopolitics could show up. Guy and Anna.
Kriti, great stuff. Thanks. Kriti will be back tomorrow, I think. Looking forward to that. Missing her. Let's talk a little bit about what is happening with those geopolitics that she mentions and how it's being folded into the story. We're keeping a firm eye. In fact, last week was dominated by news around Ukraine. So let's carry on that conversation. President Joe Biden pushing to strengthen Ukraine's position against Russia before Donald Trump's return to the White House. The president-elect, of course, has pledged to end the war started by Vladimir Putin almost 3 years ago. I think it's 1,000 days plus a few now. Let's discuss the new administration and what it could mean for Putin and for Ukraine. We're joined by Tim Ash, Senior Sovereign Strategist at RBC Blue Bay Asset Management, an Associate Fellow at Chatham House. Good morning. What happens next?
Well, there will be negotiations. It's pretty clear, I think, for the last 6 months that whoever won the presidential election in the US, that was going to be the case. Zelensky, obviously waiting for Harris win, thought it would improve his position. Putin obviously wanted a Trump victory, assuming that would help his position. But I think both sides can fight the long war. You know, obviously, Putin's got there's a lot of durability. The North Koreans have come in to help him recently. But again, Ukraine's fighting for its survival, for its life. Ukrainians are not just going to run away, walk away. They have to fight because it's their territory. And they've proved durability and also an ability to fight a long war. But I think both sides ultimately would like a settlement at this point in time for different reasons. The risks to both sides from a continued war. So there's a deal to be made. We're just waiting, I think, for the Trump presidency, for the new team to come in and actually try and negotiate that.
Does Europe have a seat at that table, and what does Europe need out of this?
Well, obviously, the Trump administration would like Ukraine just to go away. They want to focus on China. The US sees China as the primary risk. I would argue Europe sees Russia now as a primary risk. So I don't think Europe's going to walk away because they want a settlement that makes Ukraine sustainable. The worst case for Europe is that Trump walks away or imposes a deal that means that Ukraine is not secure, the peace is not durable, Russia goes in again. What does that mean? It means that there'll be no investment into Ukraine. Ukraine will economically fail, socially and politically, ultimately could fail. Imagine 1 million Ukrainians.
Is that okay for Putin?
Well, Putin loves that scenario. Putin wants a scenario, a peace that is not secure for Ukraine because he wants to go back in again at a later date. Now, just imagine for Europe what that means. If Ukraine fails, if 1 million soldiers come back, they don't get any improvement in their lives. You see political change in Kiev. You could see state failure in Ukraine. You could see Putin come back in, take the whole country. Millions of Ukrainians, tens of millions of Ukrainians moving west. Imagine Russia getting Ukraine's military-industrial complex. The Ukrainians have made huge advances in 1,000 days of war. They have a really capable military-industrial complex. If Russia gets that combined with its own, it's a huge threat, future threat to Europe. So Europe cannot just leave Ukraine alone because Trump, is not interested in Ukraine. They have to remain committed to helping Ukraine sustain its own defence because it's in their interest.
Yes. So is there a settlement that you could see Trump and Putin agreeing to that would be sustainable? Because it sounds from what you've described there is there will always be an overhang, a Putin overhang over Ukraine.
Yeah. I think the key debate will be about security. There's a lot of focus on territory. I think the Trump guys just want the conflict frozen where it is. For me, there's debates obviously about NATO membership. This war was never about NATO. Putin invaded Ukraine because he wanted the whole of Ukraine. NATO was no threat to Russia. Ukraine didn't want to be in NATO, actually, if you go back to 2014. It was about Putin's colonial ambitions to Ukraine, right? So I think, NATO is less important. What is important is Ukraine's ability to defend itself. Now, either it could be security guarantees. I think NATO members will be nervous about that. If you don't want to give NATO membership, why give security guarantees, which in the end would pull you in, ultimately will pull NATO into a future war. Yeah. I think what the deal could be is NATO gives Ukraine the kind of security guarantees that Israel has. Ukraine will get whatever weapons it needs conventionally to defend itself. Ukraine's proven more than capable of defending itself. Its problem is we haven't supplied it with the financing and munitions to enable it to defend itself. So if they get, cast iron assurances that they get exactly what Israel gets or South Korea gets, I think they can actually be secure, and Russia would be deterred from future invasion, which means the country would have a future.
And it would have a future, and it would have an investment future. Money would flow into Ukraine in that scenario.
Absolutely. I mean, I think what is currently occupied by Ukraine is absolutely sustainable. You'll see a lot of financing flow into the country. It's a low base, big reconstruction opportunities. The agro-food sector is incredibly interesting. The military-industrial complex, again, is hugely interesting to Western countries, given that Russia is a long-term threat to Europe, to European Union politicians. I mean, look at the rhetoric coming out of Western politicians since the US election. Macron, Starmer. The message is all about, actually Russia is the threat.
And will Europe have a different policy then around Ukraine and Putin versus the United States? What is the divergence there?
Sure. I mean, obviously lots of criticism of Trump, about his position on NATO, about Europe, all that. But I think there's been recognition that Europe has to stand up for itself. It has to fund its own defence. It has to wake up. How much does that
cost? How much does securing Ukraine, effectively some sort of Marshall Plan effectively for Ukraine in terms of the rebuilding, plus rearming Western Europe. How much does all that cost?
Well, specifically on Ukraine, we've been spending about $100 billion a year to keep Ukraine just in the war. I would estimate for Ukraine to win, it should have been $150 billion. Assuming the war ends, reconstruction needs between $500 billion and $800 billion, small economy, maybe $50 billion a year. I mean, they're doable when you think of the size of the European economy. And then there's the cost of Europe's own defence. With a lot of focus on getting up to the 2% of GDP NATO target. Most countries have more or less done it now. I would argue, given the threat from Russia that's been proven, we need to go to where we were in the Cold War. We're talking about 3% of GDP plus. Some countries like Poland are up to 4 or 5%. But, I'd say we need to spend at least another 1% of GDP in Europe on defence. I mean, that's hundreds of billions of dollars of additional defence spending for Europe. I mean, it's kind of ironic that I mentioned that the $150 billion a year for Ukraine to win the war, we should have provided that. We didn't. The result of not winning the war, in effect, is that Europe is on the hook for hundreds of billions of dollars a year in additional defence spending. Cost-benefit, we should have done more to support Ukraine. That's the reality.
What do we make of the Romania story then, Tim? Well, we're thinking about this region. We have a pro-Putin candidate who's doing very well and will probably be in the runoffs on December 8th.
Well, extraordinary result. I was listening to a Romanian analyst last week, and I asked the question about the chances of such an outcome. He put a 1% probability on it. I mean, I guess it shows that populism is popular. And, the Trump scenario, if you add a bit of xenophobia into the mix, it's kind of a winning formula.
It's popular with the young, though, as well, isn't it?
Well, yeah, I would step back a little bit. I mean, I think this election will mirror the election in Moldova recently. The Moldovan and Romanian populations are very similar, same language, similar kind of history. I think in the end, when it came to it, if you remember with the presidential election there, Romanians thought long and hard about it, and some Moldovans thought long and harder. In the end, it was 55-45 for the pro-EU candidate. Romania gets a huge amount of EU structural fund flows, huge amount. You're talking 3, 4, 5% of GDP, massive. I mean, if we see this candidate, the hard right candidate, win, I think those funds would be under threat. So I think in the end, Romanians, a month down the line, we have parliamentary elections in 2 weeks and then repeat presidentials. Romanians will, I think, ultimately vote for Lasconi, who's the pro-EU candidate.
It does bring into question, though, this whole idea that Europe sees Putin as the threat, though. Western Europe does. Does Europe?
Well, look, I think it's pretty clear. Europe divides fairly clearly now. I think Poland, the Baltic states, clear-cut in terms of where they see the threat. The Scandinavian countries, the fact that Finland, Sweden remarkably came off the fence and joined NATO. Opinion polls shifted. I mean, the closer you are to Russia, the kind of, I think, more sense of the impending peril.
Romania has a big Ukrainian border, though.
Again, it's this guy got 20% of the vote. Let's not over-egg the situation. Again, the proof of the pudding will be in the parliamentary elections and presidentials coming down the line. I would still think Romania split 60-40 pro-EU ultimately. But there is, the support for this nationalist candidate is not just about just a pro-Russian vote. It's about immigrants. It's about a liberal social agenda. A lot of the population in many of these countries are socially conservative. They don't really like that. We've seen a similar agenda play out in Georgia. Georgia Dream again pushed a liberal agenda. Conservative populations, rural populations, typically kind of like that. But in the end, going back to Romania, when push comes to shove, what will they vote for? EU or something else? Which is pretty uncertain. I think ultimately they will go for the pro-EU candidate, but it's a shock. And I think politicians and policymakers in Romania have kind of messed around in politics. I mean, you've had unstable coalitions, you've seen squabbling about ministerial posts, etc. I mean, they just need to get on and govern properly and in an efficient way. And I think then they'll be rewarded by the electorate ultimately. But it's a wake-up call, absolutely.
Tim, thank you very much. We really appreciate your contribution this morning. Tim Ash, a Senior Sovereign Strategist at RBC Blue Bay Asset Management and Associate Fellow at Chatham House. Coming up on the programme, Amazon is going all in on chips in a bid to reduce its reliance on AI powerhouse NVIDIA. We will dig into that really fascinating big take story. That's next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously compliance with laws and policies, continue to advance our technology and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
That was the NVIDIA boss. You might not recognise him in those clothes, but that was Jensen Huang speaking at a university ceremony in Hong Kong. I think he was receiving an award, but at the same time, we managed to get some thoughts from him, his take on the impact of a Donald Trump presidency, another one, of course. Now, let's talk about technology. Let's stick with that NVIDIA theme. In the past 2 years, NVIDIA has become the main supplier of the hardware that enables generative AI, making the company the world's largest by market value. But some of the chip makers' biggest customers are cooking up their own silicon. In today's Big Take, we look at Amazon's plans to build self-sufficiency in chips. We're joined now by Bloomberg technology editor Olivia Solon on set with us here in London. Olivia, very nice to meet you. So why is Amazon deciding to make its own chips? It's gone through the kind of complicated buy or make decision and decided we're not going to buy so many, we're going to make our own. What's the thinking?
Well, Amazon, like Google and Microsoft, has been very heavily reliant on NVIDIA chips for generative AI. But there's huge demand for NVIDIA's chips, which means they're very expensive and in short supply. So Amazon wants to bring some of that in-house to cut costs and also to kind of bring security to its supply chain.
That sounds easy.
Yeah.
I'm assuming it's not.
Right. No, they've been working on this for quite a long time. I think this chip that they're working on right now is actually their third generation AI chip. The previous two, I think one was used for some of their Alexa stuff, and they've been bringing some into their data centers. But this third one, called Trainium 2, is sort of the real push to try and compete more closely with NVIDIA, at least for some processes within their data centers. And they want to start as soon as this year.
So, I mean, there's been a lot of talk about NVIDIA and the competitive landscape and where the competition is going to come from, because it's been making all the running in these AI tools for data centers, and you know, lots of people are going to want to do it as well. So, cutting to the chase, will Amazon ever be able to either reduce or get rid of its reliance on NVIDIA?
Well, NVIDIA clearly has a huge head start, so it's going to be a big challenge. But Amazon does have a history of making its own chips, particularly for its data centers, where it's already pushed out a few other companies who were previously, you know, third-party companies making chips for it. I think one of the key challenges for Amazon is going to be the software side of things. NVIDIA's built this incredible ecosystem that makes it very easy for people to build their own AI tools using its technology. So Amazon will really need to match that if it wants to lure any.
Is the challenge actually in the silicon, or is the challenge in the software?
It's both, but I think the thing that NVIDIA has a very, very big head start on is the software, and Amazon really needs to work on that part.
How close are we? Is this something they could be doing this year, next year? Because this could have a massive impact on the valuation of NVIDIA.
Yeah, so Amazon has a couple of customers I think it's testing with. One of them's Databricks, and it says it plans to start using some of these things within its data centers by the end of this year. Yeah. But it's not going to be doing this exactly the same thing as NVIDIA at this point. I think that the best kind of possible outcome for Amazon will probably be moving some of its own internal AI processes to its own chips, freeing up the NVIDIA chips for more advanced processes.
That sounds quite remarkably logical. Olivia, thank you very much indeed. Olivia Solon, the fantastic Big Take. That's the new oil, so data's the new oil. Let's talk about the old oil,
the old stuff.
which is oil.
Yes.
It's got a big week actually coming up. So Bessent's really interesting in terms of this story. Scott Bessent, the new Treasury Secretary, coming in. He's definitely in the drill baby drill camp. You were talking about the kind of the 3 arrows earlier. One of those 3 arrows is an awful lot of oil coming into the US market. You've also got this OPEC meeting coming up at the back end of the week, kind of around Thanksgiving. 2 really interesting interactions.
Yes, I think the OPEC meeting comes next weekend, doesn't it? Back end of next weekend. So we've got a bit of time to go until then. But we do have weakness, quite substantial weakness in oil this morning, down 0.6% on Brent. Maybe that is the percent factor, the fact that there could be more supply coming in from the United States. That's certainly one thing that we're going to be watching for this week.
But he's also talking about the idea that he wants higher growth. Does one offset the other, I think, is something that we need to be thinking about as well. In terms of the growth narrative, if the US grows faster, does it consume more oil? But also, there's this whole idea that maybe the Trump administration uses oil to offset the inflationary effect that we're going to see coming through from kind of maybe tariffs, etc. So you have a low energy cost, which is great. So they've got a lot of gas, cheap oil. You then put higher tariffs on, one kind of balances out the other. Maybe.
Interested in the 3 arrows and which ones of these are going to end up being deliverable. We spoke to a couple of guests this morning who sort of poured cold water on the idea that he'll get to one of the arrows, which is a 3% deficit in the United States. So whether the oil is going to be more achievable, we'll see.
Let's find out. So let's get more information on this and the impact that the new Treasury Secretary could have. Anthony DiPaolo joining us out of Dubai to give us a take from there. Anthony, what is the perception within the oil market about what Scott Bessent as Treasury Secretary will mean?
Yeah, good morning, Guy. Yeah, interesting that he talked about those 3 million barrels of additional oil. We had heard from candidate Trump, now President-elect Trump, that he wanted to bring some more oil on. The industry is relatively skeptical about that because they're just saying there's potentially not that much room to bring more oil on in terms of supply already in the market, in terms of demand. And really, they're saying that the U.S. shale industry is more intent on returning earnings and profitability to shareholders rather than investing and doubling down in additional production. And you've also got to look at the oil price there as well, too. Is the price high enough to really incentivize these companies to bring more production to market and to invest more? We've seen some slight declines in the rig count there, some additional increases in storage. So the market is challenging. It's not a market that looks great for bringing more oil on. Certainly people want to sell what they've got, but really doubling down to make major increases, we're not really seeing that, and we're not really seeing that in the estimates that analysts have of new oil coming on from the United States.
Yeah, that'll be really interesting to see whether the actual U.S. oil industry is on the same page as Bessent then, and indeed as Trump on this matter, and how much the U.S. wants to produce right now. What position does this put OPEC Plus in? Because the focus for OPEC Plus has all been about not bringing back that oil supply because there was fears with China weakness and, well, China weakness mostly, I think, that there had been too much oil supply. And so that's where the focus has been. What does all of this mean for OPEC Plus into 2025?
Yeah, well, OPEC Plus is supposed to meet at the beginning of next week, so December 1st. They've got a meeting scheduled where they're supposed to come together and decide what the immediate term steps are going forward. Over the course of next year, in 2025, they're supposed to unroll fully those production cuts that they have in place, bringing back an additional 2 million plus barrels to the market. Well, that exceeds the forecast for demand increase next year, even apart from all the non-OPEC Plus supply that's going to be coming on. That is more than 1 million barrels from the United States, from places like Brazil, Guyana, Canada. So other non-OPEC Plus countries will be bringing oil to market. That's going to take up most of that demand. And so that's not really leaving any space for OPEC to bring barrels back to the market. They need to decide as well whether they're going to go ahead with that first round of unrolling. So far, they've delayed it already several times. The market expectation is that they will delay that again. But of course, for OPEC, kind of the answer is staring them in the face, which is bring that oil back, bring the prices down, and that knocks some of that shale and some of those new incremental productions off the market and gets them back into market share, but at that lower price level, which really isn't what they want. So the answer is there, but it's not really a palatable answer for OPEC. So the market expectation is that they'll see them kicking that can down the road, keeping production off the market so far.
Seems to be the strategy thus far. Anthony, thanks for the update. Really appreciate it. Anthony DePaola joining us on the oil market out of Dubai. So what have we learned this morning? We've learned that the market likes Scott Bessent. That seems to be certainly the narrative. The dollar's dipping a little bit, but equities largely seem to be pretty happy. We've got news on UniCredit this morning, which has been the real surprise of the morning.
Yes.
In terms of the bid for BPM.
Yeah, absolutely. So UniCredit making this bid for BPM, and the market concluding that that's going to, either for regulatory reasons or management bandwidth reasons, not necessarily for capital reasons, but it's going to make it more difficult for them to go after Commerzbank in the short term, even though we'd already heard from Orchel that he wasn't going to go after Commerzbank until, if he does at all, until after a German election. So it's sort of parked, that one, for now, isn't it, on multiple fronts. But M&A within Italy seems to be back very much on the agenda.
So you downgrade. If you're in merger arbitrage kind of trade, trying to work out what the relative percentages of all these deals getting done, you certainly downgrade Commerzbank a bit. Is it off the table? Probably not. It's interesting that the premium on BPM has risen a little bit, but not by much. We're only up around 3% this morning. Would there be somebody else coming in?
That's what we've been trying to explore. Yes, and we were reminded there's a French bank that has a stake in BPM. Agricole has a stake, and so might there be interest there? We haven't heard from them yet, so we'll watch and wait and see what develops on that particular front. We're going to get some data shortly out on Germany, the IFO numbers out on Germany, which takes us back to the back end of last week, where we were all digesting the weakness in the European PMI data. Today seems different with the Bessent effect, a little bit more risk on, but that weakness in Europe still part of the conversation.
I think Thomas Fuss is going to be joining the Pulse in the next hour. Looking forward to that conversation, get his assessment of what is happening with this German economy into the German election. That's coming up. This is Bloomberg.
ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay. Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure, yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English, Italian.
Let's try to do English-Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente, sì.
Certainly, yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, filling in for Francine Lacqua. Let's get to our top story. Donald Trump has nominated Scott Bessent as his next Treasury Secretary. In an interview with the Wall Street Journal, Bessent said that delivering on the president-elect's tax pledges is his top policy priority. Let's get a little bit more insight here and bring in our EMEA News Director, Ross Matheson, and Bloomberg's cross-asset reporter, Justina Lee. The power combo that I'm sure can digest what's going on here. Ross, I want to start with you. We're seeing green on the screen in these markets, a very clear reaction. But why?
Well, it's interesting because, of course, he's well known in the market. So this is, in a way, Donald Trump's nod to Wall Street with this appointment, with this nomination. And you can see that reflected in the fact that, you know, he's very much a fiscal conservative. So he's going to keep a close eye on inflation for a start and whether some of these policies might be inflationary. Sure, he's going to have to enact a bulk of Donald Trump's policy. He's already making that clear, at least on the tax front. But maybe he'll move a bit more carefully and a bit more slowly than Donald Trump may have wanted at the outset, particularly when it comes to things like tariffs. We can see that already in China, a sense of perhaps he is the least worst option for them as Treasury Secretary because he might be a bit more cautious on the tariffs front. He'll probably have to do something around tariffs, but maybe not with that level of speed, again, that Donald Trump was looking for. So a sense in the market of like, okay, there's an adult coming into the table at least, you know, fiscal conservative, you know, will enact on tax policy, perhaps a bit slower and a bit more cautious on the spending side at least, and definitely perhaps slower on tariffs.
Well, Justina, weigh in here. Ross is kind of talking about this dynamic of there being a relief rally. It's a risk rally, but it's also a little bit of a relief rally as well. But then you look at this bond market and you see a bid into the Treasury curve and then yet a rally in risk assets. How do you compute the two?
Yeah, I think part of the story is that kind of with Treasury yields where they are right now, there is just kind of a lot of demand. People are looking at bonds and thinking that they're pretty attractive. And at the same time, there's a relief right now because he's sort of seen as kind of being a bit more worried about inflation and about fiscal deficit. And I think it's kind of interesting because we've kind of seen the bonds and stock relationship kind of go different ways. And more recently, actually, bonds kind of have been kind of hedging stocks more. But kind of where is that going? And of course, inflation is going to be another big question here.
Well, there's this concept of the fact that he's talking about tariffs offsetting tax cuts, and somehow that makes the deficit net-net. I imagine he's got the numbers to back it up. We're looking at a 30-year as well, down about 7 basis points this morning. So you're already seeing a bid. How much of the market is actually paying attention to the deficit story as opposed to maybe this kind of America First story? What takes precedence?
Yeah, it's been kind of really interesting because I think for anyone working through the Trump trades, you've always had to kind of parse these contradictions. And I think we've seen kind of markets all along maybe downplay the severity of the tariffs here. And the Scott Bessent pick is sort of confirming that. But we'll have to see how it plays out because one of the reasons why he was picked is that he's always been able to demonstrate his loyalty. And at this point, we've seen kind of Trump really kind of aim at a pretty purist implementation of his vision here. He feels like the American people have really given him that mandate. So at the end of the day, how Scott Bessent going to kind of balance market forces as well as kind of Trump's kind of desire for tariffs, the basis desire for tariffs, I think that still remains to be seen.
Well, Ross, Justina hits on that key point that there may be a little bit of pushback when it comes to this. And we saw this with Steven Mnuchin as well, of course, in the first Trump administration, where there was that pushback, where not everyone was on board of this kind of America First tariff policy because of the ripple effects and the consequences in the broader economy. Does Scott Bessent evade that risk?
Well, that risk has got to be there, as Justina was saying. You know, Trump knows what he wants and he demands loyalty above all. And we saw he was not, you know, above criticizing his own officials or even moving them out in his first administration if they disagreed with him. The question is, how much wiggle room do you have to disagree, or rather to sort of manage the situation? So yes, I'm going to enact tariffs, but we can do this in a step-by-step fashion, and here's why. So it's all going to be about that personal relationship and how Bessent navigates that with Donald Trump. We know, for example, Donald Trump famously tends to listen to the last person in the room and the last thing that's said in the room. So the last thing you say when you're leaving is, we can do tariffs, but let's do them a bit slower maybe for these reasons. And obviously, you know, the counterpoint too is you've got Elon Musk in the conversation. And Elon Musk has got a lot at stake in China, for example. And so if you have Elon Musk also saying to Donald Trump, we need to do this with China and be a bit careful, you add that in. So maybe you do have some leeway there, but let's see how he goes.
You mentioned Elon Musk, the bromance that won't stop giving. He really backed Howard Lutnick as a potential Treasury Secretary instead of Scott Bessent. Howard Lutnick, the former Cantor Fitzgerald CEO, or is Cantor Fitzgerald CEO, has an ongoing relationship. The company has an ongoing relationship with Tether Holdings. That's something he could bring to the White House's Commerce Secretary. What do you make of that?
Well, it's very interesting, right? I mean, if there's one Trump trade that's absolutely genuine and sort of seems to be in one direction, that's cryptocurrencies and Bitcoin, because Donald Trump has endorsed these things. In fact, his family members have marketed them. So obviously, you know, the relationship there with Tether potentially that might come from this, it legitimizes cryptocurrencies even further. This would be allowing people to use Bitcoin or crypto as collateral for loans. So you're putting it in the realm of other assets that you could deem to be, you know, acceptable to be collateral. So that's further bringing cryptocurrencies into the realm of legitimate assets for everybody else. And that's something that Donald Trump is very much doing. So seeing that with Lutnick and maybe the relationship that builds there with Tether, you know, very interesting to watch.
Well, Justina, you, I'm sure, are watching this on the edge of your seat, every single move in crypto as well. I know you've certainly broken news on the crypto space. I'm confused about this crypto trade because on the one hand, you have this idea that they're acting about rhetoric that you've seen on the campaign trail, as Roz has mentioned. But then on the other hand, nothing actionable has actually happened in the government yet, or even is looking like it's going to be. It's also coming at the same time as a dollar rally, which fundamentally are two very different stories, a dollar strength and a decentralized currency, Bitcoin strength. How do you square the two?
Yeah, I think some of it is just like speculative fervor, as Ross was saying. You know, if you think about how kind of Doge was rallying off the back of, you know, the Department of Government Efficiency, it feels like we're living in a comedy here. But I think another part is people in the crypto community are really excited about the prospects of kind of less regulation around that space, especially knowing that, you know, SEC Chair Gary Gensler has said that he's going to step down. Of course, he was public enemy #1 for the crypto world. And it seems like, you know, we're going to get an SEC chair that's going to be friendlier to this community. And at any rate, it doesn't seem like it could have been worse than kind of how kind of the Biden administration seen crypto. And I think it's part of it is just that generally there's gambling spirits are back in markets, but part of it is kind of very high hopes that the SEC is going to be friendlier toward crypto.
It almost kind of feeds into this political narrative of being a little bit more populist, a little bit more kind of man of the people, which is almost baked into a financial narrative. You don't always see that outside of kind of meme stock trading, for example. Justina Lee, Rosalind Matson, we will leave the conversation there. We thank you so much. Giving us insight on what is the Trump trade, how does it show up in the crypto space as well, certainly moving assets to the upside this morning. Coming up, not all assets are moving to the upside in Europe. UniCredit has made an all-share bid for Banco BPM, potentially accelerating M&A activity in the European banking space at a very interesting time. We're going to dive into the details next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Well, President Trump being elected certainly gave a boost and gave greater clarity to this. But I will say that 2024 has been a landmark year, and that momentum started earlier this year. So if you look at what happened in January this year with Bitcoin ETF being approved, firstly in the United States and then subsequently all around the world, from Brazil to Canada to Australia, Hong Kong, and the list goes on. It gives a lot of recognition and finally the respect that this sector deserved all along.
Binance CEO Richard Tang speaking with our very own Francine Lockwood there about the state of crypto. And we should get a quick check on that as well. When we're looking at Bitcoin pricing here, right on the cusp of 100,000, 98,700 is what we'll call it, higher by about 1.7%. Remember, the standard deviation for crypto is usually about 4 to 5%. So this is actually very light trading to the upside, but nevertheless just shy of that 100,000 mark. We should also mention us in terms of big market moves this morning, and the European session seeing quite a bit of volatility when it comes to the Italian banking sector. You are seeing Unicredit down a whopping almost 4%, we'll call it. Banco BPM higher by 3.2%, and more M&A in the works, more banking consolidation in Italy, and that's going to be a trade that we continue to see as, of course, Unicredit has launched a 10 billion euro all-share offer for its domestic rival, Banco BPM, opening a second major takeover front as CEO Andrea Orcel also pursues Commerce Bank. Really fascinating time at the moment. Let's bring in a true expert. Tommaso Ebhardt, our Southern Europe managing editor, joins us this morning. Tommaso, walk us through what this move is by Orcel, because I'm having personally a little bit of deja vu with the BBVA takeover of Sabadell. This idea that you have so much international exposure, you need to go to domestic consolidation to kind of make sure you're still catering to that local market. Is that the right read?
That's a good point. That's really a good point. For sure, somehow it seems today that Andrea Orcel is moving back his attention from Germany to Italy. He made clearly a bold move and an unsolicited bid for Banco BPM. This was not expected now in terms of timing, but Banco BPM has been a target for Unicredit for a while. While it's Italy's third largest bank, it's the bank of the wealthy Milan region, and Unicredit clearly lacks presence in Italy comparing with its rival Intesa Sanpaolo. So it makes for sure sense for Orcel to do the move, but is doing this after getting a stake in Commerzbank and weighing a bid for Commerzbank. So the read that investors are giving to this, essentially this morning, is that somehow Orcel is turning back his attention to his home country, and maybe that's the reason why we see Commerzbank going down and Banco BPM going up. The bank would be the biggest bank in Italy. The big question here is how the Italian government reads this, and if the move on Banco BPM would delay any action on Commerzbank. Orcel spoke to investors this morning. He said, for now, Commerzbank is just a financial investment.
So, Tommaso, where does Monte Paschi fall into all this, given that Maloney has been trying to offload that stake as well, privatize, I think, one of the oldest banks in the world, Monte Paschi.
Yeah.
Banco BPM also has a stake in Monte Paschi. Orcel says he doesn't want it. What happens to Monte Paschi?
That's another good question. I don't have any real answer, but we can talk about it. So essentially, Monte Paschi, is the world's oldest bank. A few days ago, the Italian government managed to sell part of its remaining stake and one of the buyers was Banco BPM, who a few days before already made a bold move. They made a bid for asset manager Anima. So what's happening here? For sure, UniCredit is going after Banco BPM, while Banco BPM was somehow being part of an Italian group of investors which was buying Monte dei Paschi di Siena. So how those two things go together, we'll have to see. So far, we didn't have any reaction from the Italian government. For sure, Orcel decided to move before Banco BPM and Monte dei Paschi have closer ties. That's what we can say for sure at the moment.
It's a fascinating one. We'll see how this all shakes out. Tommaso, we didn't even get to Commerzbank, a conversation for another time. Bloomberg Southern Europe managing editor Tommaso Ebhardt trying to break down the Italian banking sector as best he can. We thank you so much. But of course, as we talk about Italy, Commerzbank is very much in focus. That stake down as well. You are seeing those stocks trading higher. We're going to stick with the Germany story. Coming up on the program, we're going to speak to the IFO Institute president on the latest survey on business confidence and competitiveness in Germany. Those numbers coming in a bit weaker than expected. That conversation next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Just when we thought there might have been a pivot point in the Germany economy, We are instead seeing the exact opposite. German's November IFO Business Confidence Index coming in at 85.7. The estimate was 86.0. Remember last month we saw a little bit of a tick higher. Today we are seeing the opposite. Let's get some more insight here. Clemens West, president of Germany's IFO Institute, joins me live this morning. Clemens, a pleasure to have you on the program. I'm going to get right into it here. It looks like there's a lot going on around both the United States and the German government that's feeding into the sentiment. Walk us through just how much worse it could get if President-elect Donald Trump does indeed input more tariffs on Europe. What does that look like for you?
Well, that's obviously one major concern, and that has been a concern in German manufacturing in particular for some time now, and it's part of the explanation why this sector is having such a difficult time. In the data we see today, this is confirmed to some extent, so the readings from manufacturing are weak, although we haven't really observed a big difference between readings that came in before and after the U.S. election. So it looks like many companies maybe expected Donald Trump to win. So there is no big change here. This month, the only bright spot really comes from consumption. So retail and wholesale has improved. The readings from retail and wholesale have improved, reflecting that the growing disposable incomes, which we do have, seem to be translating into higher consumption demand. But manufacturing, construction, and this time also services are weak.
Clemens, there are two other factors that I want to dive into, the banking consolidation story, and then, of course, this idea of consumption and taxation as well. I'll start with the latter. There is a conversation right now, as you're familiar with, that in a new administration in Germany, the question of the corporate tax rate may actually get cut. Is that enough to spur consumption and investment, Clemens?
That would be one point that is important. Taxes are high in Germany, and creating incentives would help, but it's certainly not enough. What we need is a more comprehensive agenda that would include over-regulation of the economy. It would have include the supply of energy. It would have to cover other areas in the economy, in particular labor supply. A lot of companies are concerned that they will simply not find the workforce. And that's why they don't invest in Germany. So what we need is a comprehensive growth strategy. Corporate tax rate cut alone will not be enough.
All right, Clemens, I'm going to put you on the spot here for time. We're talking a lot about banking consolidation this morning, yes, in terms of Italy, but of course, Commerzbank is coming on as a part of the conversation. I am familiar that you're not, of course, someone that speaks to the banking sector, but you mentioned this idea of consumption. Germany is known as being an overbanked space. Could further consolidation help spur the German economy further?
The consolidation of the banking sector, I think, is a Europe-wide issue. It certainly applies to Germany. At the same time, there are concerns about the style of the takeover, and there are concerns about the fact that the takeover would create a large European bank, and if that bank hits a crisis, it's not clear how this would be managed. It would be a bank that has most of its assets in Germany, but its headquarters in Italy, so who would be responsible? There are many open questions. I think for the development of the German economy, certainly some banking consolidation would be helpful, and for the development of European capital markets and European banking union, cross-border mergers should be allowed. And in general, I suppose Germany is open for that. As I said, there are some specific issues in this case.
Clemens, I'm sorry to say that's all the time we have, but we thank you so much for joining me this morning. Clemens West, president of the IFO Institute, walking us through not only the impact of that consolidation story, but also the tariff story and how that is all feeding into German sentiment. He says consumption and taxation are two key pieces. We're going to, of course, monitor that. Coming up on the program, the Rolls-Royce CEO sat down with our very own Francine Lockwell in an exclusive conversation. We're going to bring you that next right here on The Pulse. Stick with us. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. These are your top stories. Stocks and treasuries rally after President-elect Donald Trump picks Scott Bessent as Treasury Secretary. Bessent says he'll back tariffs and tax cuts. In Europe, UniCredit begins an all-share takeover bid for its domestic rival, Banco BPM, as the Italian lender also considers an acquisition of Germany's Commerzbank. And sticking with Germany, Germany's business outlook slides in November due to the government's collapse and the threat of tariffs following Donald Trump's re-election as U.S. president, both certainly a topic of mind over at the G7, where foreign ministers are meeting just outside Rome, with the wars in both Ukraine and the Middle East also at a crucial stage. Let's get more of Bloomberg's Oliver Crook. Ollie, walk us through the agenda in Rome.
Yeah, Kriti, so this is the foreign ministers of the G7 convening just outside of Rome here. This is the last G7 foreign minister meeting that will occur under the Biden administration. So really critical for Antony Blinken to get many of his sort of points across and to make any sort of enduring legacy in the last few months of the Biden administration. What we expect on day one is really a focus on the Middle East, on the situation in Israel, Gaza, and Lebanon. They're going to also be joined by the ministers of Saudi Arabia, Egypt, Jordan, the UAE, and Qatar, as well as the Secretary General for the Arab League. They're working on these ceasefire talks. We have had many conversations and many false dawns. We heard from the the Israeli ambassador to the United States a little bit earlier today, saying that potentially there could be a ceasefire discussion with Hezbollah in the coming days. Again, many false dawns there, but this from the Israeli ambassador to the United States a little bit earlier today. We expect also sort of more plans on the day after for Gaza. And of course, there's the issue of that International Criminal Court arrest warrant for Prime Minister Benjamin Netanyahu and former Defense Minister Yoav Gallant, both of which should sort of divide opinion of many of the people that are attending that meeting. We should say that this is all ahead of the Trump administration, really the Biden trying to get this sort of agenda through. Trump has said he will bring sort of peace to the Middle East, not really designated how exactly he intends to do that, though he's expected overall to take a much more pro-Israel approach.
Ollie, talk to us about the other war in this region. That, of course, is Ukraine. The approach that Donald Trump is taking when it comes to those potential ceasefire negotiations, how's that being interpreted in Rome?
Well, listen, I think that it's very sort of early days, and I think everybody is very conscious of the fact that the second that Trump comes into the Oval Office, that the paradigm in Ukraine could shift very quickly. We should say that the Ukrainian foreign minister will join the G7 for talks tomorrow in Rome. There's also a NATO-Ukraine meeting happening in Brussels tomorrow, in addition to the fact that you have the defense ministers of France, of Poland, of Italy, all meeting in Berlin today to sort of discuss what the future looks like. And we've seen the Biden administration really try to front-load as much help as they can get to Ukraine in the final months, whether it's those long-range missiles, giving the permission to strike within Russia, whether it's landmines, whether it's sort of forgiving debt. Also talking about sort of a sanctioning Gazprom bank, the last bank that is still accepting payments for natural gas that is flowing over to Europe. But there is a real consciousness that there is only so much that can be done. And for many, they're just seeing this as sort of trying to put Zelensky in the strongest position for those negotiations going in with Donald Trump. I think, Kriti, as far as the Europeans are concerned, what they keep saying is that there should be no decision made about Ukraine without Ukraine at the table. I think what the Europeans need to face is the possibility that there are decisions that are going to be made potentially about Ukraine without the Europeans at the table between Donald Trump and Vladimir Putin.
And who is ultimately going to be that potential voice now that Olaf Scholz may or may not be in power in Germany in just the next year? Bloomberg's Oliver Crook, we thank you so much for, of course, breaking that down for us. And as Ollie was saying, there's some major conversations happening at the G7 that does also include the impacts on things like supply chains and nuclear capability. The CEO of Rolls-Royce said that he's optimistic about the growth trajectory of the British company and spoke exclusively with Bloomberg's Francine Lacqua on those very topics. Take a listen.
What we were trying to do, Francine, is really create a company which is actually competitive, resilient, growing, and high-performing company. And frankly, Rolls-Royce has never been any of that. So that was actually our vision. So if you actually come to our progress, I would say we really, in a very difficult supply chain environment, we made a great progress in spite of that. And we expanded earnings and cash potential of the business significantly. And it didn't come from one division. It came from all divisions. So step change in all divisions. In fact, in the first year, our results were best on record. Now, this year, we said, we obviously first half results, we upgraded our guidance for the year. When we deliver this year's results, we are gonna, when we set the midterm targets, I call it strategic goals, but midterm targets, people thought they were really ambitious. Now, in 2 years, when we deliver this year's results, we are gonna achieve on profit more than 75% of the performance improvement, and on cash, more than 65%. So we are actually accelerating the transformation of the business.
What do you think the Trump administration means for your industry, be it transport, commercial, or defense?
I mean, reality is, I think if we start with defense, given you talk about geopolitics in the world, and defense, obviously spending has been going up in the world already. If you look at actually some of the highest sort of defense spending in the world. So relative to the history. So that trend may continue. But one thing I'm going to say, I already said we are not a weapon company. Sometimes people confuse, are you benefiting from this? Actually, our defense sort of segment doesn't benefit from that because we are a propulsion company. Our growth is enormous, regardless of current geopolitics, because of the wins I talk about, right?
But there seems to be a new phase in Ukraine, right, in the war, and that also implicates, I guess, possible extra sanctions on Russia. I mean, Russia is one of the biggest titanium producers, which you need to almost build everything. I mean, is that even are there going to be more bottlenecks with titanium?
There are already bottlenecks. Some of the supply chain issues, raw materials, actually includes titanium. But we have been actually transitioning to alternative source already. And that's what we have been doing last couple of years.
Tufan, you have been in the job for about almost 2 years, yes. Right? We're just shy of 2 years anniversary. There's a new chief executive of Boeing. Boeing has had a very difficult time in the last couple of years. Have you met with him? Did you share any advice as he starts this new job and this new hurdle?
Definitely I met him because Boeing is a very important customer, but also very important industry player. So we had a good conversation about Rolls-Royce experience as well, of course. I don't want to go into the details, but my wish is I hope they are going to recover very quickly, although there are some challenges, because really aerospace industry needs strong Boeing. I really mean it, by the way. So I think hopefully after now that strike is over, they can actually move to recovery, and I hope it is a fast recovery.
How quickly do you think they'll move? And did you share, I mean, do you have any advice for Boeing right now?
I mean, we obviously had private conversation, but these things takes, some people are saying this year Boeing will recover. These things take a couple of years at least. So, because you need to look at the culture, you need to look at how the company is run. I mean, we change everything on Rolls-Royce. I always say, people always look at what. They will never understand what we are doing and how we are delivering results until they understand how. Because how includes everything. The culture, it is how you run the company, how you run the performance management, lots of things. So therefore, frankly, they will do some of that, I'm sure.
Rolls-Royce is a UK-listed company. We have a new set of rules in terms of listings. We have a new government. I mean, have they, you know, what would you ask of the government right now? Have they been helpful enough? Is there regulation that needs to change? Energy policy? What would you do differently?
I mean, I think they came up with 8 sectors under industrial strategy. It is good. But I would say, sort of, I've seen lots of, even if they are developed like good strategies, lots of companies struggle to implement their strategy. I think the issue will be on the implementation, really. Can you actually cut the red tape? Can you accelerate the things? And some of the things, frankly, we are still experiencing needs accelerating, like SMR process, for example. It has been delayed. There is no excuse for that to be delayed. It needs to be accelerated. And underneath that, my wish is they focus on competitively advantaged industries. Why am I saying that? Because if you support competitively advantaged industry, that's a sustainable growth machine for you in terms of exports. For example, we have 2 areas we are actually competitively advantaged. UK is competitively advantaged. One is gas turbines. So I'll tell you, there are only 2 countries in the world and 3 companies in the world can do what we do. And we are one of them, by the way.
The government understands?
That's the point. Under industrial strategy, I would argue aerospace and nuclear needs to be subsectors. And nuclear, I told you, we have, and UK has, unique capability. There is no single private company in the world with that capability. We can be and should be in SMRs, like small modular reactors, market leaders in the world, right? Because you have the capability, we can actually move first mover advantage, create supply chain in the country. But for that to happen, GBM process needs to accelerate significantly. Current timeline doesn't work at all.
The CEO of Rolls-Royce there speaking to our very own Francine Lacqua. I want to bring you some breaking news that's crossing the Bloomberg terminal at the moment. It looks like Adani Green shares have dropped 10% as Total Energies continues to suspend its investments. Of course, comes on the back of the allegations for corruption and the probe on bribing out of the United States government. You are starting to see a lot of steamrolling around companies that were initially associated with that green climate agenda pulling out. Total seems to be the latest in that trend. Coming up on the program, we are on the hunt for acquisitions. We're going to speak to the CEO of Swiss industrial giant ABB. Stick with us. This is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Swiss industrial giant ABB says looking to step up the pace of acquisitions. Now, the company recently raised its margin outlook on booming demand for data centers and its power unit, but the firm's robotics and factory automation continue to suffer in the third quarter. Lucky for us to break it all down, we've got the CEO of ABB joining me right here, Morten Virod, joining me around the table. Thank you. Welcome and to the set. You've said some pretty interesting things around acquisitions just this morning. Walk us through what you're looking for. What are you shopping for?
We want to expand ABB, and we were doing really well after the last 5 years, but now moving from a profitability focus to a growth focus. And there, of course, organic growth, but also acquisitions. And we're looking for businesses that can help our core of ABB accelerate. So it's more of those nice add-ons and bolt-on acquisitions. It's often, we promised about 1% to 2% of revenue, which give you about $300 to $600 million of additional revenue every year. And it should kind of strengthen the core of ABB, that being in the field of electrification or automation. So we haven't kind of singled out anything. We are running our company with 18 operating divisions, and each one of them who has what we call a growth mandate. That means they are already running as leaders in the area and the segments that they serve. We expect them to do acquisitions, and that's the pipeline that each of these divisions are building now and have done this year. I was happy already in the third quarter. We saw two nice acquisitions, to give you examples of a SEAM company in US, which is in the electrification service business. About $100 million company that is giving us more than 300 service engineers on the ground, helping the US customers running their operations even better with better automation and electrification offering. So this is one example that we're doing. And another one was we bought the Födisch Group in Germany, which is in the field of measurement and analytics. A nice niche again, where we can build on our strength as ABB in the field of measurement and analytics. Bringing the Födisch Group together, we will be more relevant and more interesting for our customers in that field. And that's what we want to do more of in the coming years.
So you said two key buzzwords there, automation and electrification. It feels like the easiest acquisitions to do from a big tech perspective, not that you're big tech, but roll with me on this one, is to just hop onto things like data centers, onto AI technology. Is that where the lucrative deals are in terms of value add, the quick bolt-on acquisitions that you're talking about?
Yeah, I mean, AI and just the buildup of data center is driving one of the driving forces of ABB at the moment in our electrification business. So the more, of course, the more scope you can have in that space, the better. But we're always looking for a balance where we can do organic also investment. And here is about the technology. How can we expand what we do today and help these companies in the data center space, the big tech companies? How can we help them to reduce their cost of investment? Because they're building these massive data centers. Now we're talking about the 100 of megawatts of data center, which is kind of small, the electrical consumption of small towns today. So how can we help them to reduce those investment, but also to do it faster? As this is all that brings more scope into ABB, so we can help these data center customers speed up their building and reduce their building time. That is normally one of the key things we're looking for.
So faster, more efficient, but doesn't that equal more expensive as well? I mean, some of these things you're talking about are dynamics, I feel like, that exist in this energy transition space as well. And that's where part of the AI demand comes from, the data center demand comes from. But isn't that a very expensive prospect, given electricity and power and building out that infrastructure, especially here in Europe, is pricey?
Yeah, it is. And that's why you need better technology. You know, that's why I'm so happy to be in a company. We have thousands and thousands of smart engineers who gets up in the morning and look at how can we do this better? How can we do it cheaper? How can we make, for instance, today we use uninterruptible power supplies in the data center, which is what we call in the clean space, on the white space. How can we build that outside where it would be cheaper and would be easier to do? What we today talk about medium voltage UPS, which is on a higher level, and it's on the outside, which is again reducing the cost of build and also reduces the energy consumption over the lifetime. Because with these new massive data center that comes up now around the world, but also here in Europe, the cost of energy will become such an important part, but also to reduce and energy efficiency of data center is important, or else we need energy for more than just running data centers around the world.
But the dynamics around incentivizing some of that and leaning into it have changed. And I'm specifically pointing out to the election of Donald Trump as well, where some of those subsidizations under the Biden administration are largely expected to be pulled back, maybe not even helped to the same extent. You have the likes of Adani Green, for example, those shares tumbling this morning as a function of some of the concerns around being associated there, something that a lot of people had done to get ahead of not only the AI story, but the environment transition kind of green energy story as well. How do you navigate that environment where it's getting tough politically and even in the corporate space as well?
I always believe that sustainability topics and need to go hand in hand with also the business plan. It needs to be a business case for energy efficiency, for the investments that businesses are doing. So what I look at what's happening in the US, these investments that's happening now, like the utility companies they do that in renewable, like in solar in Florida, because it has the lowest cost of energy. And therefore, kind of business and also the climate targets goes hand in hand. And that's where things are happening. I do believe that you will see reduction in some areas based on kind of post-Trump election. But you will see a lot of these investments plan that sits, for instance, when it comes to power grid investments in the US, it's not based on federal funding. It's made state law, like in California. So with more extreme weather, as we face, and especially in North America or all across the world, unfortunately, these days, investment in more secure power generation, more secure power distribution is needed. So I don't see a big change, really, from that point of view, at least not for our business.
Well, certainly one we're going to keep an eye on. A final question to you, then. Talk to me a little bit about the investment in Northvolt. We're talking about this question of energy transition, about leaning into that. So many people did that for Northvolt, and so many people got burned. Walk us through your Northvolt stake. Are you looking for acquisitions similar to that now that we've seen that company file for bankruptcy in the United States?
We are still an owner in Northvolt ABB, but we are a small owner, and we are there really as a technical advisor to help them get going to build on the electrification automation side. It's been a tough ride for the company to get their production up and running. So that is, I think I have to say, it's a bit sad to see that one of the first big investments in Europe when it comes to a new energy source, like batteries, that it fails or what has happened. But I think that's always a lesson learned. We shouldn't give up as Europeans, just say, okay, this is all going to be done in the United States or in China in the future. I think there are, I'm sure, on the aftermath of this, it's lessons to be learned, and we need to see out, because I believe that Europe also have to step up in many of these new areas investment, that be in the decarbonization of industries, that be in the green steel, the green aluminium, the green cement. This is areas that over time we need to perform, also on the European continent. So I hope we take what we have seen at Northvolt to do really a assessment, and then we need to step up as a continent as well.
Well, certainly something we're going to keep an eye on. It doesn't sound like you're taking a step back from the grain transition as well. Morten Birod, ABB CEO there, joining me around the table. More to come. Stick with us. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
A lot going on in the European banking sector. Of course, we have the story that UniCredit is looking to explore a Banco BPM bid, of course, on top of Commerce Bank as well. Monte Paschi, not so much. Lots going on. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, That's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Let's set your agenda. Get ready for an economic lullapalooza. Scott Bessent is appointed as Treasury Secretary. Close to a deal, Israeli ambassador to the U.S. says a potential ceasefire with Hezbollah may be days away. All of that as we push ahead to the PCE later in the week, and a hint at the Fed's rate path. Good morning. What is an economic lullapalooza? Those are the words of Scott Bessent, the choice of President-elect for Treasury Secretary. We've been waiting and prevaricating about that. You thought about the Trump put frenzy. Well, it's now the Trump-Bessent frenzy. He's talking about tax cuts, deregulation. We're building on a 1.7% rally in the S&P last week, and the small caps put on 4.5% last week, firing ahead this morning. There's a boom time to come in the USA, and Scott Bessent wants to be part of that narrative. The bond market likes what it hears. It is a fiscal hawk in the nominee for Treasury Secretary. He's talking about the power of the threes. Never mind Shinzo Abe's three arrows. It's the Bessent threes, the budget deficit of 3% by 2028. And is he the guardrail in the room on the extremity of tariffs that President-elect Trump may well want to exert? Whatever way you look at it, ground zero for the reaction function, not just in equities, but also in the FX market. The longest rally in the dollar breaks. Is Bessent, as they say, the safe pair of hands? Does he puncture the angst in regard to that massively strong dollar? The longest rally that we've seen in a year, up for 8 weeks in a row. We start on the back foot, and as you can see, a relief in the euro bouncing from its two-year low, and the pound up by a third of 1%. As I've just said, President-elect Donald Trump has chosen his Treasury Secretary. The markets have voted favorably on the news as far as stocks and bonds are concerned, less so to Bitcoin, indeed, and a few other assets. But what is on the agenda? Well, according to the Wall Street Journal, he says that the dollar will remain the reserve currency. He thinks we should all prepare for an economic lullapalooza, thanks to the Trump tax cuts and deregulation. And he envisaged some kind of grand economic reordering, and now he gets to be a part of it. Joining me now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, good morning. The markets, equity markets and bond markets, like what they hear. Are you ready for an economic lullapalooza? Good morning.
Good morning. Yeah, look, I think it's right that the market is receiving this fairly well. You know, over the last week or two, what we've seen is an unwinding a little bit of the Trump trade, but more because of concerns around some of the extremes of the policies. You know, what would be the inflationary impact of tariffs? What could happen to the fiscal deficit? So I think this nomination is really good news in that it takes away some of those tail risks and really sets path back for the US economy onto something which is really, really strong growth, but also good news for the rest of the world too. So overall, I think this is certainly very positive.
The power of the threes, I mean, it's a reaffirmation of policy indication from Besson that we've heard before. 3% on the deficit, 3% from deregulation in terms of growth that you achieve, and 3 million barrels of oil. Don't know where they're going to get the 3 million barrels of oil from. But in regards to that deficit narrative and this cost-cutting narrative, if you could join that with Doge, is disinflation a word we should begin to parlay a little bit more 2025 versus a resurgence of inflation?
Well, I think at least we can stop worrying so much about the idea that there could be an inflation resurgence, a second wave. I think what we're seeing now, though, is that the market is just reasserting or at least returning to focusing on what the fundamentals were pre-election and continue to be in play post-election, which is still strong growth. So from that regard, I think the inflation risk is probably still present, but at least from a more healthy level, just saying, well, look, the labour market is still really resilient. So how much more disinflation are you realistically going to get at this kind of level of growth? So I think it's about fundamentals rather than just about what policy risks that could be for the future.
Look, you do put a very clear warning out there, which is this rally, this Trump put, and now the Trump-Besson put, so to speak, has been infused again in equity markets. That will run. We're risk on at the moment, but you do have a warning that some of this exuberance may be challenged at the end of the first quarter in 2025. What is the biggest challenge to that, Seema?
Well, I think there's two. One is, of course, valuations. It doesn't necessarily mean that there's going to be a correction, but it does give a bit of a speed limit, so a question mark about how much equities can rally from here. The other side of it is, as we were talking before, it was really around inflation. What's going to happen to inflation? Are you going to see this continuation of very strong growth, that no landing scenario, which then means that inflation doesn't come down and then results in the Fed becoming a little bit more hawkish, interest rates not coming down as much as the market had been hoping for. And then that starts to play into a slightly more negative story. But overall, certainly the outlook for 2025 is one of optimism and positivity, but we just don't think that returns are going to be anything like what we saw in 2024.
Okay, so maybe not those outsized animal spirits of return. But I like the way that you craft the narrative for the Fed. You say it starts with a pivot. A lot of people have pushed back at me in terms of suggesting that we're on the roadmap to a pause. But you say it starts with a pivot, has evolved at the central bank, but it turns into a swerve. Now that's a lovely way to reflect on it. What's the swerve?
So look, as we get to, we do think there's going to be a cut in the December meeting. Once you get into January, I think the Fed, we've already heard from them a number of times in the last couple of weeks, really recognizing that growth continues to be very strong, but also the fact that actually inflation is no longer decelerating. That last mile is proving to be as stubborn as some people had been warning about earlier this year. So from a Fed perspective, actually the need for consecutive rate cuts starts to diminish. So we certainly think that there's a very high chance that they will move to a more gradual pace of rate cuts. So that means missing out on every other meeting. So you still do move rates lower. We don't think that there's no more rate cuts to come after the end of this year, but you are moving at a slow pace. And of course, if the economy does prove to be as strong as what we're seeing today, there is little need for them to cut rates as much as I think had been priced into the market earlier in the year. So that 3.5% level may be a bit of a stretch in the end.
Look, the reaction function this morning is most profound in the dollar. And it seems to be this moment of reflection. I mean, it's the longest run higher in 2 years. The weekly gains have been pretty significant. This suggests maybe the most extreme part of the tariff narrative. He may be the guardrail in the room. It's just too early to kind of fly that kite, is it?
It is quite early. I mean, we as we knew before, a lot of policy proposals, but it doesn't necessarily always translate into action. So we're still waiting to see. The news for Besson is good in that, maybe tariffs won't be as significant as had been feared. So therefore, the inflation risk isn't going to be maybe as pertinent. But we are still waiting to see. And with regards to US exceptionalism, which I think is what the dollar is really trading off, I think that still stands. That was in play before the election. It continues after the election. And it's really, again, it's down to fundamentals. US growth continues to be very strong. Whereas if you look out around the rest of the world, look at Europe, for example, China, there is real economic weakness. So on that basis alone, it does still call for US exceptionalism, which means a continued strong dollar. But I think that we have to recognize that the dollar is very, very expensive. So the chances of a further significant rally is quite constrained. And certainly with the idea that maybe tariffs won't be as significant as expected, that probably does pull out those high levels that people have been talking about for the dollar for next year.
Can we just round off with the equity narrative? The earnings per share, we're just closing off this third quarter. It's the strongest earnings per share growth since 2018. And what goes through my mind is what scale of corporate tax cuts are you going to need? What size and scale of tax cuts are you going to need to see to prolong that earnings per share narrative, Seema? If we've had 35 to 21, 21 to 15 is something materially different in terms of size and scale on corporate tax.
Well, look, we're not really expecting any major new tax cuts for next year. We're just thinking that it's going to be extension of those tax cuts. You just don't get that fiscal cliff coming through. So in that regard, it doesn't actually change. It doesn't create a change in the scenario just by having extension. And generally speaking, look, I think the earnings growth picture, as you said, is positive. It's really based on that strong growth. It's probably not going to move as strongly as we've seen before, but I don't think you necessarily need to see corporate tax cuts in order to keep a really strong economic growth narrative going for the US.
Okay, Seema, thank you very much. Seema Shah there, Principal Asset Management. First reaction to the Treasury selection of Scott Bessent by President Trump, the elect president. A little bit of breaking news for you on Blackstone now. And this is what we got for you. Blackstone has struck a deal, $3.5 billion financing deal with the energy group EQT. Now, this is according to the Financial Times. Blackstone has agreed to buy the venture stake in the interstate pipelines from the U.S. energy group EQT. So it's a $1.1 trillion investment manager's first fast-growing credit insurance arm will finance this $3.5 billion transaction. It puts them head-to-head with Apollo in terms of this area. So we'll track that story through the morning. The headline, Blackstone to buy the JV with the interstate pipelines from EQT. There you go, EQT pre-market. Other stories trending on your Bloomberg terminal this Monday morning. This is what we got for you. UniCredit is launching a $10.6 billion all-share offer for the domestic rival Banco BPM. The acquisition will make UniCredit Italy's largest lender by assets and accelerate this year's wave of European bank merger activity. The Italian government hasn't yet commented on the proposed deal. Apple CEO Tim Cook is returning to China for at least the third time this year at the Suppliers Conference. The Chinese premier is expected to meet with the CEOs as the companies brace for President-elect Trump's threat to raise tariffs on Chinese goods. Cook was in the capital just last month when he promised to keep investing in the country. Anglo American said it's agreed to sell its steel-making coal business to Peabody Energy in a $3.78 billion deal. Anglo is looking to dramatically simplify and shrink the business, and restructure also involves exiting platinum and nickel mining. Coming up, get ready for an economic Lollapalooza. That's the words of the fund manager, Scott Bessent. He is Trump's pick for Treasury Secretary. We'll dive into how he won the race. And Darren Maher of HSBC joins me to talk through the dollar. Just how might it react, as it has done this morning, to Scott Bessent's nomination, right here on Bloomberg.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
It is Bloomberg Brief. I'm Manish Kraney in New York. President-elect Donald Trump has named Brooke Rowlands as head of the Trump Backing America First Policy Institute for Agriculture Secretary. That was yesterday. The pick marks the end of a process of selecting his administration's top cabinet officials. But the pick that stands out from everything, it is the Treasury Secretary. And finally, Square Capital founder and CEO Scott Bessent was nominated. Joining me now, it is our chief political correspondent, Amory. Amory, great reporting on this throughout the whole of last week. Bessent won out, much, I would say, to the chagrin of maybe Elon Musk, if you could put it in that way. But he is the nomination. The markets are reacting really, really quite strongly. Their stocks, bonds, and FX. What can we expect?
Right, he's being welcomed by the markets, an individual that he's talked about. He wants to have this three-point plan to cut the deficit, still have growth, expand U.S. energy that could potentially help in that pro-growth environment. And the markets are hailing him because this is someone that's very well versed in global financial systems around the world. But we should note that amongst all the other nominees, potential candidates as well, these were all top contenders of high caliber people, but it went to Scott Bessent. And the thing about Scott Bessent is he has been on the president's side throughout the entire campaign and has been a key economic advisor throughout the campaign. He was the front runner in the very beginning, and then throughout this whole 2-week soap opera, it went back to him in the end. So I think you're going to get a very pragmatic Treasury Secretary. I know a lot of individuals have pointed to some of his comments on tariffs. He might be this moderating voice on blanket tariffs, and he is going to make sure that he has his eye on the stock market and the $28 trillion U.S. Treasury market that he will be now overseeing, if confirmed.
Well, he is the global salesman for U.S. assets and the keeper of the dollar. There's a couple of lovely lines in the story. You talk about the 3 arrows in his quiver, as it were, for economic policy. But what happened to the other chess pieces that you so correctly suggested, which was Kevin Walsh and, of course, Rowan? Is there another chess piece to play with Walsh? Will he possibly end up at National Economic Council?
Potentially. We'll have to wait and see. We do know that Kevin Walsh, formerly of the Fed, wants to go back and be the Fed chair. We do know that Jay Powell is up in 2026. Potentially, you could see Kevin Walsh at NEC to be the NEC director. That was a position that Larry Kudlow occupied during the first iteration of the Trump administration. A very vocal member of the team, an individual that works very closely with Treasury but sits in the West Wing and really does a lot of the economic liaison between Congress and some of the other institutions around the West Wing. Potentially potentially he can go there for 2 years and then go to the Fed, but we have not yet got a nomination when it comes to the NEC. And there's other economic jobs we're waiting for as well. We need to know, of course, who's going to be the undersecretary and the deputy secretary when it comes to Treasury Department, but also who is going to lead the FTC, who's going to lead the SEC, and then Howard Lutnick, who really wanted the Treasury job but was nominated to do the Commerce Secretary position. When his announcement came, it talked about having a very much so a broader portfolio when it comes to trade and tariffs, even including, at least in this statement, talking about USTR filtering up through Howard Lutnick. We still don't know who the USTR ambassador is going to be. That individual in the first iteration of Trump went to Ambassador Bob Lighthizer.
And there's also a presumption that to expand Lutnick's portfolio or power in his portfolio, it's going to take a little bit more of ratification from Congress. I do want to square off on one visit over the weekend. We understand that Mark Rutte visited Mar-a-Lago. Of course, Mark Rutte is the NATO Secretary General, the new NATO Secretary General. And the first words out of his mouth at one of the first press conferences was about ingratiating himself to Trump in terms of the pressure that he had exerted in the first administration on defense spending.
Well, I would say Mark Rutte sat down with us in Davos and talked about the fact that he, in his words, Trump was right when it came to the defense spending of other members of the alliance, of the NATO alliance, that he was right saying that the U.S. spends much more than everyone else, and if this is going to be a collective alliance, everyone needs to spend their 2%. He also, in this interview with us, had a great line. I think you basically see that playing out now in this idea of like raw economic power. He basically said, you know, we'll dance with whoever's on the dance floor with us. And that's, as he's the NATO Secretary General, that's going to be Donald Trump.
There's a lot of dancing at Mar-a-Lago over the weekend, celebrating finally the decision on who is the Treasury Secretary. Anne-Marie, great to have you with us this morning. You'll see Anne-Marie a little bit later on in surveillance with the team. Let's cross to the Middle East now. Israel is potentially days away from a ceasefire with Hezbollah. That's according to the Israeli ambassador to the U.S. The proposal entails an initial 60-day suspension of hostilities, but still requires approval from the government. Jumana Besechi joins us now. Jumana, good to see you this morning. So the details on this potential ceasefire, Emish Hochstein has been busy.
Yeah, that's right. And certainly the comments from the Israeli ambassador to the U.S. this morning are encouraging. He's saying, and this is a quote, it could happen within days. And as you mentioned, Amos Hochstein, the Middle East envoy, was just in the region last week having conversations with the Lebanese side and the Israeli side. He spoke to the Lebanese Speaker of the House, Nabi Habirri, who suggested that a ceasefire agreement has been accepted by Hezbollah, but with a few, quote, technical details. Now, it remains to be seen what exactly those technical details are, but definitely Amos Hochstein felt like he had enough in offering to go to the Israeli side. And we're hearing this morning from that ambassador that they potentially could come to a truce agreement in the next couple of days. Now, in terms of the details, as we're just showing there, it would involve a 60-day suspension of hostilities, during which Hezbollah would have to retreat away from the border about 30 kilometers north of the border, north of the Litani River. The Lebanese army would then step in to oversee the proceedings in that part of the country alongside a UN peacekeeping force. And then there's one last element as well that Israel are insisting on, which is in case there are any infractions, they would still like to retain the capability to resume strikes on Lebanon in case that happens. And from what we know, that is not acceptable to the Lebanese side. So there's still a few details to be discussed, as I mentioned, but it certainly appears as though there is a massive push from the Biden administration to get this over the line, Manas.
Jumana, thank you very much. Jumana Besechi there on the very latest prospects for ceasefire between Hezbollah and Israel. Coming up, flying high at the box office, we discuss how much Green Wicked made at the theaters this weekend after its marketing blitz.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones. I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never Ready? Go.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Manish Krenny in New York. Front pages, this is what we've got for you, making headlines around the world. First up, New York Times. Immigrants in the U.S. are racing to get ahead of President-elect Trump's crackdown. He has vowed to slash immigration and ramp up deportations on day one. Foreign-born residents are taking whatever steps they can to protect themselves from the sweeping measures. Next up, Bloomberg leads with the charges against Adani. This may test President-elect Trump's desire to keep India close to the U.S. U.S. prosecutors have charged the Indian businessman, Gautam Adani, with a $250 million bribery scheme. This might bring the relationship between Trump and the PM Modi into question, but it remains unclear how Modi will look to distance himself from Adani. And the Journal? Well, the Journal leads with Wicked, defying gravity at the box office, with fans flocking to the theaters, sporting whatever color they can get their hands on, pink and green. The musical's film adaptation brought in $114 million over the opening weekend, setting up for a long run through the holidays. The weekend's other new release, Gladiator 2, pulled in $55.5 million. There you go. And you've got your pink and your green ready to rock and roll. I've got people that are going to see that twice. There you go. That'll add to the numbers. Leave with a snapshot of Bitcoin. It's still reflected glory.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Manish Krani. Let's set your agenda. Get ready for an economic lollapalooza. Scott Bessent is appointed as Treasury Secretary. Close to a deal. Israeli ambassador to the U.S. says a potential ceasefire with Hezbollah may be days away. All of that as we push ahead to the PCE data later this week for a hint of the Fed's rate path. Good morning. The markets are rejoicing, not just a Trump put, but the Trump Bessent put. It is on fire. Look at those small caps adding to their 4.5% rally that you saw last week. This is boom time in the USA. You're getting ready for this economic Lollapalooza that Bessent promises in the Wall Street Journal. Roll it over, have a look at the bonds, because the bonds are reflecting on a fiscal hawk nominee. That's essentially what you've got here. 4.33. You saw PIMCO say you want to get in and buy those bonds at 4.5 to 4.45 to 4.5% last week. But we're down 6 basis points this morning. The threes from Bessent, and one of those is the budget deficit to 3% by 2028. We need to understand what fiscal hawk really means from Bessent in terms of, are the worst of the tariff, or the extremes of the tariffs perhaps guard-rated? Roll it over, have a look. By the way, you've got $183 billion worth of 2s, 5s, and 10s coming to the market this week. The dollar steps back this morning. There's a global reflection moment in the FX market. You've just broken the longest weekly rally in a year. Is Bessent the safe pair of hands that punctures the angst in regards to the worst of the tariffs? So the dollar drops by 0.5%. The euro bounces from its 2-year low. And of course, the sterling gets a little bit of a relief. As I say, ready yourself for a Lollapalooza. That is on the agenda now, that according to the President-elect Donald Trump's pick for Treasury Secretary Scott Bessent. Before the election, Bessent spoke to Bloomberg TV about how he envisions Trump's policies affecting the economy. Here's what his view was on the dollar. Let's take a listen.
We could see what's called the dollar smile, which you start out, right now we have high interest rates, high deficit. If you were to get inflation down to or below target through deregulation, through energy, then interest rates could come down, and you would have a market-based dollar depreciation. But in terms of an overt weak dollar policy, I wouldn't expect that at all.
So no overly weak dollar policy, and he reaffirms in the Journal this morning strong dollar policy. Darren Maher is the head of Americas for Research and FX Strategy at HSBC. Good morning. Welcome to the show. There's Scott Bessent, before he got the job, talking about the dollar smile. In other words, this quite sort of Nirvana-like scenario where you get inflation coming down, rates coming down, and a market value, a dollar smile. Are you a believer? Are you a buyer of that theory from Bessent?
Yeah, look, yes. Short answer is yes. And I think markets are heartened to have someone, if you like, at the helm of the Treasury who is clearly an advocate for a market-determined exchange rate. And I guess the key, though, is where on that smile are you? I mean, when people think about the dollar smile, they're normally thinking it does well if either the US economy is doing phenomenally well or phenomenally poorly, and if you're in the middle, then other currencies tend to fare better than the dollar. So I think he was anticipating that's where we would be. The reality, though, is that the US economy is doing incredibly well. The rest of the world, not so much so. I mean, it's Thanksgiving week. We're meant to remember our relatives. So Besant has to remember the relative story here, which is the US economy is doing far better than Eurozone, others, et cetera, and I guess more recently, inflation is a little bit sticky. So again, part of that pre-election narrative of declining, slowing inflation, it's not quite landing yet in the US.
Do you think that, I mean, he is undoubtedly a fiscal hawk. He talks about his threes, he talks about cutting the deficit by 3%, spurring growth by 3% through deregulation, and 3 million barrels of oil. If these are the trifecta of what he's going to base his policy on, Dara, that has capacity to reintroduce a stronger disinflation narrative 2025.
Absolutely, it does. It does. Now, then the question becomes delivery, right? I mean,
yes, and I think that takes a couple of years rather than year one.
But look, you wake up this morning, and who wouldn't be happy to say, I'm in a job, and the equity market's rallying, the bond market's rallying, and okay, the dollar's a little bit weaker, but it's had a fantastic run for the last month or two. So I think you'd be pretty pleased with the initial reaction, but the key here is delivery, right? And also, how does he reconcile necessarily what he aspires to? Does that always align with what President-elect Trump aspires to in terms of the outcomes of fiscal policy, what it means for taxation, spending, and US activity? I think the thing that would save, if you like, save the story massively would be if the US economy continues to perform well, right? Growth covers a multitude of sins on the fiscal front, and I think that's what they'll be hoping for.
I mean, the business activity, the fastest since 2022. The divergence between Europe and the US is becoming more profound with every data point, isn't it? You said if the dollar was an equity investment, you'd recommend a hold right now. Why?
There's a lot in the price, right? I mean, prior to this election, I had a look at a table of, let's say, forecasters of the dollar for a year away, euro-dollar, let's say. We were the most bearish on the street on euro-dollar, and our forecast for 12 months away was 105. And, you know that wasn't nearly bearish enough. So we, like others, have revised up our dollar view for 2025. We've got 99 cents now as our forecast for euro-dollar end of next year. Makes it sound like Walmart, doesn't it? Get it for 99 cents. But that's where we're at, and I think that makes sense. But right now, we've moved from 112 to 105. I think, and there's a lot in the price by way of ECB easing. We've taken a lot out of the price by way of Fed easing. So, just relax, enjoy your Thanksgiving holiday, chill, it's a hold.
It's a hold for now. In terms of the Fed, it's interesting, Besant is an advocate of this shadow Fed, this shadow lead at the Fed maybe being put in there. How disruptive would that be if that's something that is pursued by Trump and Besant? It could be, and it was speculated to be Kevin Warsh last week. He would go to Treasury, and then he would morph into the Fed. How disruptive would that be if there was this shadow quasi lead at the Fed implemented?
Well, Donald Trump has made it clear he thinks there should be a voice, or that at least there should be awareness of what the government might think should happen on monetary policy. In a way, we've had this before. In the first presidency, President Trump at the time did like to talk down rates, did like to criticize Jay Powell, he did like to talk down the dollar, right? So this would be kind of version 2.0. Now, we did some analysis on this, and what we found out was if we looked at euro-dollar in the 30 minutes after a Trump tweet, it moved only fractionally. And in fact, if you looked at how the dollar moved or euro-dollar moved in 30 minutes after CPI, non-farm payrolls, more than double the impact. So there is an impact, right? So these tweets and these observations from the White House do have an adverse impact on the dollar, but they're completely overshadowed by what the economic data is. And at the end of the day, that's what the Fed will tell us. It comes down to the data, and I think they'll brush aside, if you like, if there is political influence, they'll be well capable of navigating their way around that, if you like.
It's good to know there's empirical research on
Who does there? I mean, it's amazing.
No, yeah, you're right. In the first sort of 30 minutes after a tweet, and then the longer road. Let's just round off with the ECB. I mean, we made the 2022 lows on the back of the PMIs. Our PMIs are so much stronger. As I say, that divergence trade is very, very clear. How do you rate the possibility of the ECB being so defensive they would go for 50 basis points in December? Or is that just market hype?
Yeah, markets are just greedy, I think. I mean, like, that's... So we need this idea of excitement. Now, I think there's some doves on the ECB that would love that. Panetta, Storneras, maybe would advocate for 50, get rates to neutral and below quickly. But there's a big center ground that is, oh, let's go 25, 25, 25. And there's still some hawks who will say service sector inflation, still pretty punchy, right? And wages growth, still, although backward looking, still pretty punchy. So no, I think we're stuck on a 25 trajectory, which again brings me back to this idea that we're in a hold for the dollar because we're kind of priced for or flirting with exciting outcomes, 50 from the ECB, nothing from the Fed in December. And their flirtations I don't think will be delivered on, which is just going to be a nice, boring run into the end of the year. Famous last words, you can use that in a clip at some point in the future, but there we go, a boring run into the end of the year.
We'll end up with the likelihood of another jumbo cut, it seems pretty low, but we'll cut that one up. We'll put it out on Twitter today, and we'll see what response we get from Eurodollar on the back of that. Dara, thank you very much. That's Dara Maher at HSBC. Coming up on the show, President-elect Trump's hunt for his cabinet members. It comes to an end. More on the story. That's next on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It is your Bloomberg Brief. I'm Manny Cranney here in New York. President-elect Donald Trump's nomination of Brooke Rollins for Agriculture Secretary marks the end of a process of selecting his administration's top cabinet picks. Now, the pick that stands out from the rest, it's undoubtedly the Treasury Secretary, which finally went to the Key Square Capital founder and CEO, Scott Bessent. Joining me now for a closer look at the hedge fund manager is Bloomberg's Megan Crane in Washington. Megan, good morning to you. The markets have responded positively, stocks, bonds. The dollar's dipped a little bit, and I think this has a lot to do with the credibility on the delivery of policy in the seat of Treasury. Good morning.
Good morning. Yeah, I think the markets are responding to the fact that Bessent is a known quantity. He's and also a student of economic history who, is believed to be possibly a moderating force on Trump's efforts to really shake things up. He's big on growth and growing our way out of deficits. He's certainly supporting the tax cuts that the president has been talking about for quite some time.
The question that goes through mine is, of course, what happens to Kevin Walsh now? There was a lot of discussion about the game of chess, that Walsh would go to Treasury, Bessent would go to the NEC for a period of time, and then change. But it raises other questions about Elon Musk and his reach into some of these political picks, and perhaps changes the narrative a little bit.
It does a little bit. I think Elon Musk might be learning a lesson about Donald Trump in that he does not like to be managed. A lot of people in Washington have tried to influence Trump and his decisions over the years, and he doesn't like that to be obvious. And Elon Musk weighing in on choices, regardless of who he is, on, the richest man in the world, he's still, the president-elect is the president-elect, and he is going to make the choices that he prefers. And even Elon Musk is going to learn that probably many times. Also, I think that, Walsh has made it clear he wants to be a part of the Fed, the Fed chairman, and that is, certainly a possibility in the coming years. So maybe that's something that, he put on the table as well. The 4D chess is a little complicated, mostly because, Trump isn't always looking so long term.
No, and we know that favor can come and go quite quickly. Look, a lot of this is going to come down to the approval process. There was a salutary lesson in the Gates debacle last week, stepping out of the process. Talk to me about Tulsi Gabbard. How likely is she to get approval?
Well, so Matt Gaetz sort of stepping off the stage does turn a lot of attention back to Tulsi Gabbard, who is under scrutiny, I think, importantly, not for her personal life, but for her professional choices. And, meeting with the president of Syria, her comments sympathetic to Russia over the years, I think will really intensify scrutiny of her and her history. Whether she gets through or not is, anyone's guess at this point. But she does seem to be definitely under a microscope for some very questionable to the senators positions, and they are not her personal life. They are professional decisions that she made as a member of Congress, and I think that is going to be a pretty difficult nomination process. It's certainly a deep examination of her record.
And then this goes to the heart of this incoming administration not having signed off all the necessary paperwork for some of the background checks and the FBI background checks, and that seems to be quite a contentious issue. There's still no sign-off on that process yet, is there?
That's right. They're still have not moved forward in that regard. The Trump administration incoming Trump administration is sort of doing it their own way. And that will raise questions among senators. They take this process very seriously, not only because they want to maintain their power and their influence over who is in the cabinet, but also some of them just truly, believe in the system, believe that we need to know the background of the people who are coming in to lead these huge agencies with massive budgets and really big, a lot of influence on the lives of everyday Americans.
Well, it's certainly being raised by a number of different factions, isn't it? Megan, thank you very much. Megan Crane there in Washington. Let's turn our attention to the Middle East. Israel is close to a ceasefire deal with Hezbollah. That's according to the Israeli ambassador to the U.S. The proposal potentially days away. It entails an initial 60-day suspension of hostilities, but still requires the approval from the government. Dan Williams joins us now from Jerusalem. Dan, the details on this potential ceasefire. This is about a movement of troops and about widening the gap between Israel and those Hezbollah forces.
Indeed, and we're going on what has been stated before. I think perhaps despite the optimism, the guarded optimism of a number of Israeli officials and even one US official we spoke to today, it's worth recalling that we've had upbeat predictions before that did not come to pass. And also Hezbollah, Lebanon have yet to respond today to these latest reports. Nevertheless, the messaging from the Israeli and US sides, and these are allies who've been conferring very closely on the Lebanon plans, is that a deal could be in place. And to judge by previous statements on the conditions for such a deal, Israel wants a long delayed, basically a 2006 UN Security Council resolution ending the previous Lebanon war implemented, such as Hezbollah's fighters are driven north of the Litani River, well away from the Israeli border. However, it wants to go beyond that resolution and institute some sort of oversight mechanism involving not just UN peacekeepers, not just the Lebanese military, which is meant to take the place of Hezbollah in southern Lebanon, but also potentially the United States and France in monitoring implementation, monitoring any infractions by Hezbollah. And the big rub here is that Israel also wants to retain the right to restart military action against Hezbollah in the event of such infractions. The Lebanese and Hezbollah have not been happy about this demand in the past. We'll see whether it's still part of this proposed deal, it appears to be, and whether Hezbollah and Lebanon have relented.
Well, where are we in terms of the pressure domestically? I'm just looking at the latest. Israel's National Security Minister, Itamar Ben-Gvir, warns Netanyahu against this. It would be a historic missed opportunity to eradicate Hezbollah. So where is the political landscape domestically in Israel? Is it pro-ceasefire, or is this an outlier faction?
Well, it's worth remembering that the Prime Minister Netanyahu has a fairly broad right of center and far right coalition government. The man you mentioned is a far right member, and he has in the past come out against ceasefires, what he would see as basically depriving Israel of what he would call a total victory. However, it's worth recalling that in recent weeks, Netanyahu expanded the coalition government with more centrist members who presumably would buttress him against any potential walkout by the far rightists. So I don't think there's any problem in terms of Netanyahu's ability to deliver a deal. I think the big question mark here, as I said, is whether Hezbollah has relented on this Israeli condition of being able to retain the right to resume fighting should there be a perceived Hezbollah infraction. Also, it's worth recalling that in the past, at least, Hezbollah has linked any Lebanon truce to a truce in the Gaza Strip. Such a truce is very elusive in Gaza, a different front where Israel is also fighting an Iranian proxy in the form of Hamas. It would appear potentially that Hezbollah has abandoned that, in which case we would be coming closer. But as of today, there is still firing across the border in both directions. Yesterday saw more Israeli airstrikes in Lebanon, some 250 missile launches by Hezbollah into Israel. So it would appear that as long as there is not a deal in place, the fighting is going on apace.
Okay, Dan, thank you very much. Dan Williams there with the very latest on the potential for a ceasefire. Back to Wall Street. We've more than 95% done with this earnings season, and the last big consumer earnings are going to hit the tape from the retailer side. Bath and Body Works this morning, and Macy's on Tuesday. Joining us now is Dasha Afanasieva. Dasha, we're heading into this shopping season. We've been told we've obviously 5 less shopping days this year to get our goodies in between Thanksgiving and Christmas. So that's going to have an impact, but the consumer remains strong. These retail earnings, however, they affirm this bifurcation.
That's right. I think we can look to Walmart and Target for some really interesting insights on how the consumer's doing. Walmart's increased its outlook, whilst Target's actually experiencing quite sluggish growth. But both agree that the consumer is actually resilient. So Target, the chief commercial officer, Rick Gomez, was saying that consumers remain pressured, but that they're still resilient, and that they're they're shopping around, and they're really looking for those sales and willing to search across multiple retailers to find those sales items, which of course makes it really, really challenging for retailers hoping for any kind of loyalty from consumers. Similarly, Walmart talk about the consumer being resilient, but their Walmart has reached out for the higher income consumer that's trading down, looking for those bargains, and therefore has had a much stronger outlook. They say that they've seen higher engagement with cohorts with upper income households accounting for the majority of their share gains. So even though the consumer's resilient, it's this really tough, really competitive bargain hunting environment that we've seen for several quarters now, and that no doubt will play into Macy's results, into Kohl's, and into Bath & Body Works.
Okay, well, certainly our inboxes are full, our phones are pinging with offers for Black Friday, and certainly we've got 5 less days, 27 days, I think, shopping for Christmas and Thanksgiving than we had last year. Dasha, thank you very much. Dasha Afanasieva on the retail track coming up in the show. We'll set you up for the agenda. Key data ahead of a short week. It is Thanksgiving week this week. We'll run you through the slate in just a moment.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Your week ahead looks a little bit like this. FOMC minutes are released at 2 p.m. tomorrow on Tuesday, followed by the Fed's preferred inflation gauge, PCE. I'll hit the tape on Wednesday. U.S. markets are closed on Thursday for Thanksgiving holiday, so liquidity is going to be a little bit thinner. Some key movers for you to keep an eye on. EQT, we broke this news a little bit earlier in the show, agreeing a $3.5 billion financing deal with EQT. That is according to the FT. So Blackstone agrees to do a JV. This is for the interstate pipelines with EQT. Surveillance is up next. They'll take you through the rest of the news flow.
let's say somebody is an Uber or Lyft driver today, where they can actually sort of manage a fleet of cars, and sort of manage, I don't know, 10, 20 cars, and just sort of take care of them like a shepherd tends their flock. You have a little flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that would be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. So, we do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's obviously, that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes, but in 2026. So, yeah, before 2027. Let me put it that way. We'll make this vehicle in very high volume, but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and it's Cybertruck too. Yes, of course. Sorry, I don't want to forget. Yes. All our cars, basically, all cars that we make. So.
Incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Down 6, and that unlocks some dollar weakness against the euro and the Bolka G10. Euro dollar this morning looks like this, at 104.88 and positive by 0.7%. The race is over. We can finally stop talking about it. The Game of Thrones down in Palm Beach, Mar-a-Lago, Florida, it's all done. The Treasury Secretary pick is Scott Bessent.
It is Scott Bessent, and that's probably the reason why we're seeing something of a relief rally, this belief that he will be a tempering force for President Trump when he does come to office. I will just say we won't stop talking about it, because now there are a lot of questions about how someone who is very much won his bona fides on Wall Street will moderate a signal from President Trump, who has shown again and again it is his policies and his word that is going to get through.
Well, Terry Hens puts it well. We're going to be speaking with him, talking about this cabinet of rivals. You have someone like Scott Bessent really modulating some of the forces like a Howard Lutnick, who's going to be overseeing trade. Bessent has come out and talked about the fact that when it comes to tariffs, maybe they will be a negotiating tactic. Maybe that needs to be the tool used to actually get to free trade and potentially modulating what maybe Howard Lutnick wants, which is blanket tariffs. The fact of the matter is the markets like it because this is someone who really understands financial markets.
It was a world-class shortlist. It's a world-class pick. We can all agree on that. Most people in markets agree on that. But I think we've said this a few times last week. So let's just paraphrase a quote that we read out a million times through last week. The biggest challenge for Scott Bessent is not executing policy. It's managing the consequential volatility that might undermine those policy changes. We're going to see a big realignment in global trade potentially, some big moves domestically as well. It's managing the fallout of that that's going to be a major challenge for him.
I would take that a step further and say it's unclear, and he actually muddies the water when it comes to understanding how tariffs are going to be used. Will they be used as a negotiating tool, as he talked about, an aggressive negotiating tool? And some people in China are thinking maybe we're going to end up with a situation where it will be an easier person to deal with, given the fact that he has talked about China being an important ally in certain capacities. It's a different type of rhetoric than the sort of poisonous one that we've heard from other places. There just is a big question mark. To your point, Emery, I think it's the right one about the cabinet of rivals. We're getting mixed messages about what the policy, overriding policy is going to be. And that uncertainty is still present, even though there is this relief rally this morning.
But tapping Mr. Bessent, one thing was clear from Donald Trump. He wants to protect financial markets at all costs. That was what you've called, Jonathan, the Trump put of the first iteration. And that is very near and dear to his heart. And that is very clear with this Treasury pick.
I was going through the to-do list last night, and there are many things on that list. Let's be clear about that. You've got to oversee the maturity profile of the debt. You've got to ensure that debt continues to attract financing. You've got to maintain the faith in the US dollar, which may well offset some of the harm caused by higher tariffs at the same time, that we look to realign global trade. That's a long, long list. But I'll tell you what really stands out for me as very interesting, just in terms of a real-world experiment. We are taking an individual that has made a fortune on anticipating policy changes and the asymmetric bets that they create to getting hold of the levers. I think that's really interesting. This is a guy who knows what the right and wrong policy move is. He's made money off that through a long, long career. Now, finally, he gets to control some of the levers.
There's a quote that Scott Bessent said in an event in June, and I thought this was really telling. We are going to have some kind of grand global economic reordering. I'd like to be part of it. I've studied this, says the Yale professor, the hedge fund manager who is now rising to become Treasury Secretary.
Equity futures right now on the S&P rising as well, up by 0.5%. Coming up this hour, we'll catch up with Lucy Baldwin of Citi, following a solid week of gains. Terry Haynes of Pangea Policy as Donald Trump picks Scott Bessent to head Treasury, and Jane Foley of Rabobank as the dollar rally reverses course. We begin this hour with stocks looking for a sixth straight day of gains as markets welcome Trump's decision to nominate Bessent for Treasury Secretary. Lucy Baldwin of Citi is still cautious, writing, "Our expectation is that current consensus for 2025 is aggressive, and this is before tariff concerns can be modelled. So we expect the post-election rally needs to pause and pull back." Lucy joins us now for more. Lucy, welcome to the programme. Let's try and look ahead to 2025. Are you making any assumptions whatsoever when it comes to taxes and tariffs?
Hi, Jonathan. Great to be with you. Yes, as we look into 2025, you've obviously now shifted from election uncertainty to policy uncertainty. And as you say, there's the sort of four pillars of policy, right? You've got the sort of pro-growth cyclical levers where you've got clearly some expansionary fiscal policy. Now we know, we've obviously got Scott Bessent in the Treasury, so people feel more comforted that that's not going to lead to too many challenges from a deficit perspective. But you've also got, obviously, the sort of more pro-growth policies around deregulation, and we're seeing that play out in financials in the market. But when we look into next year, like a lot of people across the street, we're not changing radically at the moment at this stage our growth forecast for the US economy. I think most people, if anything, are slightly edging up their GDP growth assumptions. Most people assume that what we're going to see isn't going to be too inflationary. And those, of course, are very big assumptions. But right now, I think as people calibrate those pro-growth policies, obviously potentially offset by tariff, trade and the immigration policies to some degree, that seems to be where it's landing, is that most people expect some moderation in US growth next year, but not radically so, and an element and taste of US exceptionalism still very much there, Jonathan, as we look into next year for growth for the US.
You say that, Lucy, and yet you're not changing your view, and the market is changing its view. So you have this contrarian moment where Citigroup, on the margins, is leaning into some of the weakness in Europe and away from some of the U.S. exceptionalism that you've seen. Can you talk about being contrarian at a moment like this tactically, even if long-term, you still see that American exceptionalism is in play?
Yeah, and I think that the parts of our calls that are contrarian, to your point, right, our base case for the S&P this year is still 5,600, right? 6,100 is our bull case, and we look at next year and we say, look, 15% earnings growth, which seems to be what the sort of consensus forecast still looks like to us, is quite aggressive, despite tax cuts and everything else and deregulation. So we feel like that, when you have a sort of 23 times earnings setup, is quite a tall hill for the market to climb to go on from here. So we've got that's contrarian. The other thing that we still have that is a contrarian call is a view that we may still get outsized rate cuts this year. Obviously, non-farm payroll data in December is going to be key after the weakness that we saw in November, caused partly by obviously hurricanes and strike disruption. But if that is another weak data point, we wouldn't rule out another 50 basis point cut. Now, I think if you saw 25 or 50 basis points of cut, that's probably going to support the market. But I think to see a real Santa rally into the back end of this year, it's obviously going to require a little bit more. Now, all of that said, we're definitely not telling people to sell their exposure to the US market, right? We're still saying, look, you've just got to be a little bit more selective under the hood here. And there's lots of pockets of the US market that we really like. But to your point, we have coupled that now with a barbell approach. So we've also said to people, look, keep the US, think about that exposure, pick some new sectors perhaps under the hood, think about the broadening thesis in the US, but add, if you can, a barbell approach to have some Europe, because obviously Europe has been incredibly beaten up for lots of obvious reasons, right? Positioning is incredibly light, but you are going to see, we think, that continuation of fairly aggressive ECB rate cutting, which is going to support Europe, and you have got this chance of the German elections really triggering a bit of a reset moment for Europe. Obviously, a smaller version of what you're seeing in the US in terms of regulatory reset and fiscal stimulus that could be on the cards for Europe. So if you can barbell it, that is definitely what we would suggest here.
When you say go into Europe, are you talking about the bond market with ECB rate cuts? You're talking about stock markets that could actually get beaten up by the idea of tariffs, US exceptionalism continuing, and frankly, a lack of innovation at a lot of companies. It's even been flagged by Christine Lagarde.
And I think you're right. Europe has got a huge number of structural challenges that it's grappling with, but to some degree, a lot of those things are priced in to the European market. So, for example, things we would like in Europe would include financials and tech, right? So we think there's lots of opportunity still in sectors like that. Sectors like industrial goods, capital goods, are going to see some pretty significant changes. Of course they are. So we'd be a little bit more cautious there. But a recent upgrade we've made within European equities is actually on the resources side, right? Because again, we feel it's been so beaten up. It's a sector that's performed so badly on the back of all of the obvious to do with Trump, tariffs, China, and all of the risks around that. But we actually see there's some potential there because, again, although the China stimulus, for example, has been a little bit disappointing, we think there would be more to come there. So we've recently upgraded this year's China GDP a little bit, just to 5%. We haven't got huge confidence on next year, but I think to your comments, right, as this trade policy becomes clearer as we go into next year, it may well be that it's much more around negotiations. And that obviously looks quite different compared to the sort of more bear case scenario for tariffs, which is a sort of, broad tariffs on everything, right? There's a huge range of outcomes you could see, some of which are clearly significantly less bearish for Europe than is probably currently priced into the market.
Lucy, do you have a sense of the to-do list when it comes to tariffs? Who is going to be the first?
Well, this is a great question, right? I think so that clearly the consensus is China in almost all formats, right, is going to be a focus. Europe is clearly going to be a focus to some degree, sometimes by sort of default. The other one, of course, is Mexico. And actually, this is where we put on an interesting trade more recently from an FX perspective, because we actually think, shorting the euro relative to Mexico might be quite a good trade here, because perhaps Mexico, although it's performed as you perhaps would expect, given the focus on Mexico by Trump in terms of the narrative, we think that relative to China and to Europe, it's probably going to come off less badly. So we think that might be another way of thinking about how these tariffs come through, taking it from that perspective as we look into next year. But I think you're right, absolutely China is going to be incredibly exposed, and Europe. But those are the three markets in aggregate that are going to clearly be in the firing line.
Given we know that China builds factories in Mexico and they try to use Mexico as his back door, why don't you think Mexico will be one of the first countries that Trump wants to make sure he deals with?
Well, I think we've got a big debate on Mexico that's clearly ongoing at the moment. Is it a sort of bridge to China? Is it a buffer? And I think that it'll be one of those areas where Trump is obviously going to look to Mexico to really help the implementation of their immigration policies. And again, like that's another area of policy uncertainty, by the way, which is hugely unknown at this stage. I mean, most people's base case is a slowing of immigration into the US, but it's not an outright reversal at this stage, right? But I think he's going to clearly want to work around immigration. To your point, he's clearly going to work on it not being the back door. And in which case, I think, although we've seen signs of that already being agreed between Mexico and the US, I think they're going to want to get that agreement in place and implemented well in advance of the USMCA, which comes up for that renegotiation in 2026. Mexico is hugely important, don't forget, to the United States. It overtook China as the #1 country that the US is importing from. So to try and tackle both Mexico and China incredibly aggressively would be hugely problematic for the US from a growth perspective. Trump knows that. He doesn't want to see huge inflation coming back to the United States. He knows that's how he's got himself back to the White House. So you've got to remember they're going to be incredibly pragmatic dealing with inflation, and to do both China and Mexico very aggressively from the get-go, I would imagine, is incredibly difficult to manage from an inflationary perspective.
Hey, Lucy, smart as always, and good to hear from you. Lucy Baldwin there of Citi. Just finishing that conversation there on trade, China, Mexico, Europe, of course, a factor in all of this as well. Euro dollar 104.86. This morning, a stronger euro. A little bit later this hour, we'll catch up with Jane Foley of Rabobank, who's looking for a move to parity in 2025. I think the right question to ask right now, Lisa, is how little things need to go right in Europe to generate a big move higher in Europe and the euro and European equities.
Well, that's the fascinating part of Lucy's point here, is that their forecast hasn't changed dramatically for U.S. growth following the election. So if their growth model hasn't changed dramatically, then maybe the dollar on the margins has gone too far, and it wouldn't take much for people to really have underpriced Europe, which is why they're leaning in. I think that is the right question at a time where we get yet another negative economic read out of Germany, and everyone sort of just kind of shrugs. It's like, what else is new? So, it turns the other way for a hot second and everybody will buy the euro.
Euro dollar 104.85 is getting bought this morning. Let's give an update on stories elsewhere this morning. Here is your Bloomberg brief. Apple CEO Tim Cook in China for at least the third time this year. Cook attending a supplier conference in Beijing. The Apple boss is also expected to join a meeting of foreign CEOs with the Chinese premier. The meeting is expected to address supply and trade issues ahead of the incoming Trump administration. Elsewhere, Gautama Adani and his nephew Sagar Adani have reportedly been summoned by the SEC to explain U.S. allegations in a $250 million bribery case. News agency PTI says they have 21 days to respond to the legal requests. And finally, Wicked and Gladiator 2 bringing in a combined $170 million in US and Canadian theatres over the weekend. Wicked finishing in first place with $114 million in ticket sales. Gladiator 2, the sequel to the 2000 Best Picture winner, grossing $56 million to finish second. It's quite a weekend here in the United States.
It's always the redos. It's always the ones that are kind of banking on an existing franchise. I'm looking forward to when they create a new franchise, or they really go out there and there's a new superhero, or,
I'm looking forward to going back to the theater since I haven't been, because I will go back for Gladiator 2.
You're still pitching. She's still going for it.
I'm going to watch Gladiator this weekend.
You are?
Yeah, I'm in love with the original. I imagine I'll be disappointed by the sequel.
100%.
But I'm still going to go back and torture myself with it. Up next on the program, Donald Trump's Treasury Secretary.
We had a Trump presidency that delivered low inflation, the high real wage growth, and good economic growth, especially for working Americans. I think it's absurd to say that Donald Trump would be inflationary.
The latest on the man himself, Scott Bessent. That conversation up next, live from New York City this morning. Good morning.
as we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Live from New York, welcome to the program. Equity futures on the S&P 500 up across the board, a rally in the bond market, unlocking just a little bit of dollar weakness. Euro dollar 104.84. Under surveillance this morning, Donald Trump's Treasury Secretary.
We had a Trump presidency that delivered low inflation, the high real wage growth, and good economic growth, especially for working Americans. I think it's absurd to say that Donald Trump would be inflationary. If bond yields go up, they would be going up because there is a growth impetus, and the market would price in a higher growth trajectory. In my mind, it will not be because inflation will be going up.
So here's the latest this morning. The wait is over. President-elect Donald Trump picking money manager Scott Bessent for Treasury Secretary. Terry Haynes of Pangaea Policy writing, Friday's Bessent Treasury nomination and economic policy team of rivals is more evidence that Trump's economic policy isn't a settled thing. There are no guarantees Bessent is the top Trump economic advisor or is able to drive Trump policy in Congress, both requirements of the job. Terry joins us now for more. Terry, let's just take a step back and think about the process over the last few weeks. Is there a signal that you take from the process?
Well, the signal I take is that it's the policy is still developing, frankly. I mean, you've got, and that's not unusual for incoming administrations. You've got a lot of people, as you've seen, a lot of people wrestling around, what the priorities should be and what the policies should be on all kinds of matters. And economic policy is no different. And, now you've got this situation where Bessent and Lutnick were duking it out over the Treasury Department. They're both going to be relatively close advisors. They'll be joined by some other people as well. So, that's not completely filled out. And the question is going to be, who's going to be the most effective? Who's going to help sell the policy? And frankly, who's going to be the lead horse whisperer here for the president?
Given this team of rivals, how important is it to have someone at the NEC that can bridge that gap between Treasury and Commerce?
I think it's very important. The NEC position has grown in stature over time. It's been somebody in the last few administrations who has been kind of personally close to the president in one way or another. And a third voice is really going to be necessary to make sure that the best policy is going to happen. So.
Given what you know about Scott Bessent, who has won out after this 2-week soap opera of who was going to get that top job, what do you expect him to really want to prioritize on day one?
Well, excuse me, Bessent thinks about this very much the same way I do, which in the clip you ran in the bumper says it. Trump is not going to, politically and practically, Trump is not going to want to take a situation where he won in part by saying, Trump can fix what Biden-Harris caused and immediately launch into an economic policy that doesn't start fixing things or arguably makes things worse. The three things I would say about Bessent briefly are, kind of positive, neutral, negative. One is positive is that he's practical. He comes from a practical background, and markets always like that and think it's important. The team of rivals thing, as we've talked about, I think is very much leaves economic policy somewhat up in the air. Because, thirdly, what you have to remember is the Treasury Secretary is what he or she is, but those people are staff. And if you think that Bessent's going to have a free hand in some of this stuff, I advise you to give Janet Yellen a call. Markets thought 4 years ago Yellen was going to really moderate a lot of the more inflationary aspects of the Biden policy coming in, and, whoops, that didn't happen at all. So, Bessent's going to have to, nobody's going to hand Bessent the reins here. He's going to have to work for him.
Terry, you talk about a team of rivals. David Sanger in the New York Times put it as sort of three distinct ideologies that are emerging. The revenge team, you're looking at, for example, the idea of ripping apart the Justice Department. The Calm the Markets team, which consists of Scott Bessent. And then the government shrinkage team, which is Elon Musk and Vivek Ramaswamy. In any world, are these three ideologies peacefully coexistent?
Well, the New York Times is big on ideology. I think it's, but I think this is less so. I think what it is really is a scrambling for what the priorities of the administration are, and one of the many ways, I don't diss at all the kind of brief that Musk and Ramaswamy have. I wish them well. I wrote in a piece a week or so ago, I'm for at least half of what they want without even knowing what it is. I mean, that's how over bloated Washington bureaucracy is. And so, they've got a big job in front of them. But the likelihood that they achieve any of those is, as everybody's pointing out, is slim to none. Ronald Reagan found that out, of course, and what Ronald Reagan focused on was economic recovery. Then that makes most sense for Trump as a president. That makes most sense for Trump as a lame duck president. What you have in Bob Kennedy, and he's not alone here. I'd put Congresswoman Gabbard and Pete Hegseth in this box as well. Are people who are meant to be disruptors, but at the same time don't really have any experience or any serious idea about how to disrupt and how to do it effectively and well. The Biden administration is, excuse me, Biden administration is useful in this as a comparison here. Drug pricing was a very big deal to these people, and after 4 years, pretty much all they got was an agreement on renegotiating the prices of a few drugs under Medicare Part D, and they didn't even roll that out quickly. People underestimate the time and the effort that it takes to turn the battleship around.
Terry, appreciate your time this morning, sir. Thanks for your input. Terry Haynes there of Pangea Policy. Manus Cranny was talking about this earlier this morning as well. Markets move really quickly. You've lived Washington, D.C. Washington, D.C. does not move really quickly.
And that's probably going to be the one hurdle, really, for Scott Bessent. He understands markets. Does he understand how slow the Washington complex actually works?
That conversation will continue. Up next on the program, we'll catch up with Mike Dada of Roth MKM on why tariffs would make the Fed's job a whole lot more difficult. That conversation is just around the corner.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Five-day winning streak on the S&P 500. Make it day 6 potentially. Equity futures up by 0.5%. Outperformance on the Russell. The small caps rallying hard, up by 1 full percentage point. The wires in the bond market, there's a rally. After a 4-day sell-off at the front end of the curve, the 2-year yield is lower by 3 basis points. Lisa, 4.34.
Scott Bessent has actually made a real priority of reducing the deficit. That's one of his goals. It's one of the reasons why he is so passionate about getting into service, which is the reason why Treasury markets are relieved, thinking, okay, this is somebody who is not going to allow President-elect Donald Trump to actually get this deficit sky high. Here's a question. How is he going to do it? He's also talked about issuing longer-dated debt as opposed to concentrating issuance in the short end. Can you affect that with this kind of somnolence in the bond market?
Can I offer some slightly different framing?
Please.
Pick up on something that Anne-Marie was talking about last week. This move today is not about who he is. It's about who he isn't. We had a really, really good list of 4 people. There was a fear that maybe it wouldn't be one of them, that it might be someone from like way out there, who knows? Like the dark horse candidate we were talking about was Senator Haggerty.
Right.
It could have been someone completely different.
Right, it could have been someone, I mean, if you look at some of the other cast of characters, part of this cabinet actually plucked from...
Which brings back a little bit of a bid to the bond market, which unlocks some dollar weakness. And you see that, Lisa, across G10. The dollar weaker against pretty much everything, including the euro, the yen, and sterling as well. Trying to extrapolate out these moves out a year, 6 months, 3 months, 5 minutes.
2 days.
I think it's super, super hard.
Yeah, well, I mean, I think that your framing is correct in terms of this is an embrace of someone who Wall Street
It's a rival cabinet, the way Terry Haynes is, it's a rival cabinet, the way Terry Haynes is talking about. But Jonathan, you said something very interesting at the top of the show. He made his money looking 6 months, 12 months out. Huge bets. I mean, we are talking about trades this man put on with the likes of George Soros and Stanley Druckenmiller, betting against the Bank of England, betting against the Bank of Japan. It's interesting, in one of the opinion pieces this morning on Bloomberg, it talks about his colleagues talking about his uncanny ability to read newspapers 6 months ahead of time and now have the ability to potentially be on the other side of those trades and direct policy.
It's going to be an amazing experiment in real time. Lisa's talked about this a few times over the past few weeks. Guardrails, checks and balances. Some really important observations over the past week alone. We've had some people come out with conspiracy theories that Elon Musk is somehow some shadow vice president. I think an important observation to make this morning is that Elon Musk wanted Howard Lutnick and we've ended up with Scott Bessent. Point 1. Here's point 2. Some other people have made this point that Donald Trump, president-elect, will have unchecked power in Congress. I think we have to make 2 observations there as well. One, we've ended up with a very different Senate Majority Leader to the one that arguably some of the people closest to him wanted. And two, they're not just going to fold over in the Senate and give him everything he wants. That's why Matt Gaetz has dropped out. It's why we've had a second AG pick. So we are getting, I think, a better read as time passes by on just how strong the checks and balances will be in certain places.
This has also given people a sense of calm, at least in markets, that you can't really move too quickly. I would just caution, of course, that it is early days because we don't really have a sense. You mentioned Elon Musk in particular, and maybe he didn't have influence with the Scott Bessent pick. At the same time, there was a call with Google over the weekend with Donald Trump, and Elon Musk was on that call. That was an unexpected mess. Unexpected. This is according to reporting by The Information. I just don't still have a clear sense of what the first buddy actually is and what kind of influence that is. At the end of the day, Donald Trump makes his decisions, and that much has been made clear. And to the extent that Elon Musk had unfettered access, well, that was just tempered.
Yeah, and I think Scott Bessent is the most recent example of that. But to your point, of course, Rick Scott was the other one. Elon Musk was really pushing for this individual. You can just see his political influence goes just so far. At the end of the day, it's Donald Trump's decisions and also the people around Donald Trump, like Susie Wiles.
Super early days, but just reading the tea leaves. Just reading the tea leaves as the days pass us by. Let's turn to this story. NVIDIA's biggest customers are looking to reduce their reliance on the chip maker. Amazon Web Services, Microsoft Azure, and Alphabet's Google Cloud Platform all developing their own AI chips. Amazon standing out with the broadest portfolio of custom chips.
So to me, there's a couple of questions here. First of all, Amazon wants to counter NVIDIA. How much do all of the big tech names want to actually support that effort simply because they don't want NVIDIA to have such an upper hand? There's also this investment that they've made with this AI startup. They've invested something like $8 billion in this AI startup, basically saying to them, please, the one prerequisite is use our chips. And that AI startup has come to them and said, okay, we will, but it's important to have all chips, including NVIDIA. So there are limits to how far you could use Amazon's chips in the large language models.
That's the latest on that front. I wanted to turn to this story as well. The NATO Secretary General Mark Rutte met with President-elect Donald Trump over the weekend. NATO saying the pair discussed the range of global security issues. Europe waiting to see how the next administration will approach the war in Ukraine. Of course, we've caught up with the former Dutch Prime Minister a few times on this program over the years. I remember the last conversation we all had with him in Davos, Switzerland, and he turned around as the Dutch Prime Minister and said, you know what? Donald Trump was right. And you said at the time there's a close relationship there. And if he did become the head of NATO, we'd have a very different relationship at the top and between President-elect Donald Trump.
When it comes to all the European leaders, he was one of these individuals in the first iteration of Trump that almost was a Trump whisperer. He was able to deal with President Trump in a way that you were not able to see with, say, Chancellor Angela Merkel. When we spoke to him at Davos in January, he said the U.S. accounted for about 50% of NATO economic output during Trump's term, but about 75% of military spending. That is why it led him to believe that Trump had a point. And then to this meeting, I am not surprised they met alongside Representative Waltz, who's going to be Trump's national security advisor. In January, he told us you have to dance with whoever's on the dance floor, whoever that partner is, and that's who the American people elected.
I want to understand what this means for Ukraine, considering the fact that Mark Rutte has been a big proponent of Ukraine's independence and ability to fight back. Does that temper? Does that offer some sort of check to your points earlier that were really spot on to Donald Trump's impulse to withdraw funding altogether?
We'll see. We've gone through a lot of issues in the last 5 minutes, haven't we? And they're really, really big issues for 2025. These are issues the Fed's got to grapple with as well. Investors are waiting FOMC minutes out tomorrow as uncertainty over the incoming administration's policies clouds the outlook for interest rates. Michael Dada of Roth Capital Partners writing, headwinds to the supply side from a tariff shock and slower labor force growth will make the Fed's job of guiding nominal spending in a non-inflationary manner much more difficult. Mike joins us now for more. Mike, welcome to the program, sir. I want to talk about labor force growth with you and just take a step back away from the conversation about 2025 and think back to the last 12, 18 months. To what extent has labor force growth bailed out Fed Chair Jay Powell?
Thanks for having me on, John. Great discussion this morning. Look, Fed Chair Powell has said on many occasions that a rebound in the supply side of the economy has been very important in the Fed achieving both lower inflation and what's been, a soft landing. So the last 6 quarters, we've had a situation in which real growth, real GDP has actually accelerated. but nominal GDP has slowed down. So one is the demand side that the Fed controls, and the other, real growth, has been doing better because productivity growth has rebounded. Part of growth potential is obviously productivity. The other part is the growth rate of the working age population. So with stronger immigration flows, that has certainly helped on that side. And what we see is, nominal wage growth has decelerated pretty significantly. Recessions typically happen when top line growth, nominal GDP, falters relative to slower moving cost variables. That puts pressure on profit margins, leads to layoffs, and a rising unemployment rate. So far, the Fed's been very, very fortunate that we haven't ended up there. So, what we're trying to say in the note is that anything that disturbs the supply side of the economy and this rebound in the supply side that we've enjoyed over the last 6 quarters will make the Fed's job more difficult.
So, Michael Dada, as you know, the Federal Reserve would refer to labor force growth. Republicans would call it what it is, illegal immigration. Now, Mike, Republicans have been elected for many reasons, one of which in many places is illegal immigration, and they're willing to do something about it. Do you have any expectations, any base case assumptions on what 2025, 2026 will look like in that regard?
It's really cloudy now. I mean, you've had a lot of verbal proposals out there on the tax side and the immigration side. Obviously, I think there's going to be a strong effort to secure the border. Beyond that, in terms of deportations and how significant that is, I really think it's up in the air.
So basically, we're talking this morning a lot about how there are a number of checks on some of the broad-based assumptions initially with the Trump trade. You raise immigration and a question of the unknowns of how that will affect the labor force, but also the tariff trade and the idea that this would somehow amplify inflation. You push back against that too. You think that the market response to tariffs will be the opposite, will be deflation, and then that could actually pressure things downward, whether it's growth and whether it's inflation.
Absolutely. So, you have to go back about 100 years to see an environment where tariffs went up dramatically across the board. And that happened in the 1930s. So that was not an inflationary period. That was a deflationary period. The Fed was really responsible for that. Obviously, it allowed the money supply to collapse by a third and nominal growth to collapse by almost 50%. So those two things aren't going to be repeated this time. But a tariff is a relative price shock. That's different than a monetary inflation. And so a tariff in and of itself is not going to lead to sustained higher inflation on a repeat basis unless the Fed is conducting monetary policy in an inappropriate manner. So the tariff shock makes it tougher for the Fed, I think, in terms of trying to see through those supply side shocks and perturbations. But in terms of what would drive inflation higher in a sustained way, it's really a matter of the Fed and how it conducts monetary operations.
Michael, a lot of people have been saying that because of the red sweep and because of some of the policies that are confusing, when you put them together to really get a clear read, they make it a lot more difficult. Nonetheless, the consensus is that the neutral rate is going to be significantly higher, at least somewhere between 4% there and about. Do you agree? Do you think that basically this means the Fed just can't cut rates nearly as quickly because of the lack of certainty of what the end target is?
Yeah, great question on the neutral rate. I mean, that's really the answer to why is the economy not crumbled with all these Fed rate hikes? Now they're reversing course, obviously, and starting to cut rates. And I think the answer to that is that the neutral rate in a hot business cycle with higher inflation than we saw in the previous cycle is much higher. So, when Fed Chair Powell began this rate cutting effort, what was he saying? He was saying our policy rate is above all estimates that are mainstream of the neutral policy rate. That is no longer the case with the Fed having cut rates 75 basis points in nominal terms. In real terms, it's a little more because inflation expectations have bounced back modestly. So now the Fed has the policy rate, sort of right in between the highest and lowest estimates out of, quote, the mainstream to quote or reference Fed Chair Powell. So it's really going to be data dependency from here on out. The Fed isn't sure where the neutral rate is. My sense is they're still at least modestly restrictive, but you're exactly right. And one real simple statistic I think can tell us why. If you look at CPI inflation from the sticky price sector, core excluding housing, it's running about 100 basis points above the average from the last cycle. And so if you tack down 100 basis points to the peak Fed funds rate from the last cycle, that takes you into the low to mid threes for the nominal Fed funds rate. So, that's below where we are today, but it's much higher than the Fed policy rate peaked in the last business cycle. So the neutral rate is higher. Fed doesn't know exactly where R star is, but they're probably now more confident that they're not above all estimates of neutral.
So what does that mean for the Fed in December, Michael?
Yeah, I think it means that we could be getting close to a pause. It's really going to depend on the flow of data. Markets still think that there's more of a probability that they cut another 25 basis points, but after that, I think things really slow down, and it depends on the flow of data. Probably more weighted to to these labor market reports. And we've had some strange reports. I mean, going into the summer, it looked like the labor market was faltering into a potential recessionary pattern, and then most recently, the unemployment rate has pulled back. Obviously, the October data was storm distorted, so I think we're going to need more information. The Fed's going to need to see more data, but I think they could be getting close to a pause here.
Hey, Mike, appreciate your time as always, sir. Mike Dowder there of Roth Capital Partners, looking ahead to the Federal Reserve minutes a little bit later this week. In the bond market this morning, yields are lower by 5 basis points on a 10-year, 435. With an update on stories elsewhere this morning, here is your Bloomberg brief. We start in Israel. Israel's ambassador to the United States saying the country is close to a ceasefire deal with Hezbollah in Lebanon. It's unclear whether Hezbollah would accept a deal. The Iran-backed militant group fired at least 250 rockets and drones into Israel yesterday alone. UniCredit making an $11 billion all-share bid for rival Banco BPM. Acquiring the company would make UniCredit Italy's largest lender by total assets. CEO Andrea Orcel also pursuing a merger with Germany's Commerzbank, which is facing opposition in Berlin. And finally, Max Verstappen securing his 4th consecutive F1 championship at the Las Vegas Grand Prix over the weekend. Verstappen finishing only 5th in Las Vegas, but managing to outscore rival Lando Norris, making him only the 6th driver in F1 history to win at least 4 titles.
Aren't you sick of him winning? I mean, isn't it kind of boring? It's like, yeah, Max Verstappen won again.
So typically it's boring if they have the fastest car. I think that we can make a pretty strong argument. We can all agree that he did not have the fastest car to win the championship with, so it's pretty impressive. I think Max is a beast and deserves a ton of credit.
So he's going to be the Michael Jordan of F1?
I wouldn't go that far. I think that's still Lewis Hamilton. Okay. And Lewis Hamilton is going where next year? Ferrari. What a beautiful thing. Oh. All right, enough on F1. Up next on the programme, a sigh of relief.
Besant has to remember the relative story here, which is the US economy is doing far better than Eurozone, others. The key here is delivery, right? And also, how does he reconcile necessarily what he aspires to? Does that always align with what President-elect Trump aspires to?
That conversation up next, live from New York. You're watching Bloomberg TV.
about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that, other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The equity market rally continues, up 0.5% on the S&P following a week of gains and a day of gains every single day last week. 5-day winning streak on the S&P. Under surveillance this morning, a sigh of relief.
Besant has to remember the relative story here, which is the US economy is doing far better than Eurozone, others. The key here is delivery, right? And also, how does he reconcile necessarily what he aspires to? Does that always align with what President-elect Trump aspires to? I think the thing that would save, if you like, save the story massively would be if the US economy continues to perform well, right? Growth covers a multitude of sins.
So here's the latest. President-elect Donald Trump naming Wall Street veteran Scott Bessent to run Treasury, widely viewed as a safe-hands candidate, triggering a relief rally in bonds and unlocking some dollar weakness following 8 consecutive weeks of strength. Jane Foley of Rabobank expecting dollar weakness to be temporary, looking for euro-dollar to move to parity around the middle of next year. Jane joins us now for more. Jane, welcome back to the show. As always, it's good to see you. Let's talk about that dollar strength you expect to resume. What underpins it?
Well, thanks for having me. Well, to be honest, I don't really see an awful lot of carryover from the pullback that we've seen today. You've got to bear in mind that at the start of this month, we were still trading just above the 109 area quite briefly. So the dollar has made a huge amount of gains in just the past few weeks. So I think pullbacks were inevitable. We didn't know what the trigger would be, and hence we've had the trigger. But I think you could look at this pullback in a slightly different light and say, isn't it amazing that euro-dollar hasn't gone further? That we are still trading below 105 this morning. And essentially, I think it's really, really important to not just look at the US fundamentals, but actually to cast, a strong light on the Eurozone fundamentals too. And what we have in the Eurozone is, I think, a weak Euro story. And I think that is something that's going to pull euro-dollar lower.
Jane, that said, you said it's surprising that you're not seeing more of a bounce given that there's some sort of catalyst. At the same time, when it comes to the fundamentals, there was German business confidence that came out overnight, and it was worse than expected. So the actual data is really backing up this move. Do you get the sense the bar is pretty low? That if we get even just a little bit of economic data out of the Euro region that's positive, you get a bounce, given the fact that we've kind of stabilized a little bit, maybe for half a day in the dollar?
You know what? I'm not so confident with the euro. One of the stories I think was being really quite exceptional for the G10 FX market in most of this year, certainly the first half of the year and part of the summer months too, was the resilience of the euro. The euro just wasn't going down, and I think part of that was this expectation that Germany was going to bounce back in the second half of the year because we were going to have real incomes, real household incomes push higher, the consumer was going to return. That hasn't happened, and I think the market is going through this adjustment now of expectations, which is fundamentally that the German structural issues are going to take a lot longer to work through. So these adjustments with respect to, the energy crisis, for instance, the loss of cheap Russian energy, the fact that the labour market is very different, much more constrained in Germany, the fact, and I think this is really important, that the Chinese market has really changed. For decades, German manufacturers were exporting machine tools, and now a lot of that manufacturing goods, cars, EVs particularly, is coming back right at Germany. And if you look at what VW is saying, you look at what Mercedes is saying, there's big structural problems there, and I think they could probably welcome a weaker euro.
Given the fact that we are seeing a bit of a relief rally today, I think it's worth looking at Scott Bessent and the Treasury Secretary pick and what some of his views have been on the currency. In the past, he's really made a point of saying that it's important to maintain the status of the dollar as the world's reserve currency. Do you think that that will underpin maybe greater strength, maybe a move away from gold on the margins, and a structural shift toward parity for a longer period of time?
I think it certainly could. We've got to bear in mind, that the dollar index has been slowly climbing higher since around about 2010 anyway. And I think this can really accelerate the move. Now, if we look at the US Treasury historically, there has been a strong dollar policy. We know that there's a question mark with respect to Trump's view because he wants to address, the US trade deficits in goods with countries such as